From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks holding close to session highs amid a rebound from a steep sell-off that has driven the market to near oversold levels, rebalancing from institutional investors, potentially lifting equities at the end of the month. Here's where we stand. Right now, the S&P up 69, a gain of 1.7%. The Dow also scoring a 1% gain, up by 330 points. NASDAQ up 296. That is a gain there of 2.5%. So ahead of the weekend, long holiday weekend for a lot of people, we've got the S&P down year to date by 13.4%. 10-year yield 2.73%. Spot gold up $2.90 the ounce, up 0.2% to $18.53. Dell Technology shares after earnings up now by 12.3%. Dell is surging after reporting quarterly revenue that topped analyst estimates. Wall Street, meanwhile, looking ahead to next week's jobs report. Ivy Jack is head of equity research at North Star Asset Management.
There's no doubt that jobs continue to be strong. The consumer continues to be healthy. You know, we haven't started seeing like an increase in delinquencies. So right now the consumer is healthy. And in terms of jobs and employment, things look very good.
Iran's paramilitary Revolutionary Guard has seized 2 Greek oil tankers in the Persian Gulf after Athens assisted the U.S. in seizing an Iranian oil tanker over alleged sanctions violations in the Mediterranean Sea. Oil is advancing up 0.7% among some of the big oil stocks. ExxonMobil up 1.1%, BP down 0.4%, Chevron up 0.7%, EOG Resources up 2%, Pioneer up by 2.1%. Recapping, S&P up 1.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, check your calendars, everybody. We are almost getting ready to wrap up the month of May. We've got one more day, right? 30 days has September, April, June,
we got one more day, Carol.
On Monday, right?
Yeah,
right.
Tuesday.
It is Friday, May 27th. We are live in our Interactive Broker studio. We are streaming on YouTube. Well, you have to understand, this is the kind of week we've had. It's been quite a week. We were in Vegas for not even 24 hours. And so Tim and I, in our perspective, were like, wait, where are we?
But, you know, here's the thing. I was looking at the handy charts earlier today, and the S&P 500
I believe they're handy-dandy charts.
Handy-dandy charts. The S&P 500 is actually flat for the month of May right now.
Wow. And we were actually...
NASDAQ 100's down a couple percent.
But we're up for the week overall,
We are. First time in a long time.
All right, so we're going to talk about the markets. We're going to talk about the latest batch of economic data. We're also, speaking of the markets, going to tell you about the daylight rally indicator that just might be a bullish signal.
Also, some executive and organizational changes happening over at Rivian. That has the stock rallying. Carol, also, would you like to make an investment bet on perhaps the passage of legislation or maybe the winner of the Best Actor at the Oscars?
Sure, why not?
Okay, well, you can do that now. There's a new company called Kalshi out there.
I love this story.
Really good.
Markets evolving. That story in the new issue of Bloomberg Business Week. Also, we're going to catch up once again with Grayscale Investments CEO Michael Sonnenschein. He's back making the case for crypto. And then we have the CEO of High Hemp making the case for organic cannabis.
We're going to wrap up with a couple of guests that will help us kick off the summer as we talk beer and big screen blockbusters. You going to see it? Top Gun 2?
I don't know. No,
Okay.
I'll wait till it's out on streaming. Anyway, beer for our
to wait a
producer,
while.
Paul Brennan. We're just going to put that out there. Thumbs up, 2 thumbs up. All right, let's get to the market drivers report. Let's set the Business Week agenda. Sitting patiently by Kriti Gupta, markets correspondent at Bloomberg in our Interactive Broker studio. Michael McKee, international economics and policy correspondent at Bloomberg. He is already starting his weekend, I'm just going to say.
He's been here since early morning, okay?
He's had so much economic data to have to pour over. Kriti, let's start with you. Rally holding, and this is going to be interesting going into that holiday weekend.
Yeah, really interesting. On my handy-dandy Bloomberg terminal, just for you. The S&P 500 up 1.7%, but to me, the outperformer, it's the NASDAQ, right? It's 2.5%, but it's also the Russell 2000. I think this isn't getting enough attention this week. 2.2% rally in the Russell 2000 in this kind of sphere where we're talking about inflation and recession odds and the little guys getting really affected. it's going to show up in the Russell 2000. So to see that kind of outperformance relative to the S&P 500 by both the NASDAQ, the big guys,
Right.
I put that in quotes for our radio audience, you didn't see my fingers, and the little guys, the Russell 2000, to see them both outperform the S&P 500, to me, that screams momentum trade.
Yeah.
It also screams rebalancing trade because, of course, this is the last trading day of May. So you do see essentially a reversal in the market, not just the stock market, but in the FX market as well. The dollar weaker.
Don't we get
these last
trading on
couple of
Monday?
days.
Is it Monday, May 30th?
Sorry?
We're trading on Tuesday. Monday's a holiday.
Yeah.
Oh, right.
If you come to work,
See?
Carol, on Monday, you are going to be a very lonely person.
Yeah.
I really was
Yeah.
thinking. Okay, it is the last.
So I'm sorry,
day.
this is not the last trading
No,
day.
there's Tuesday.
you're right.
Tuesday's the last
Tuesday as
trading
well.
day.
Tuesday.
Yeah.
Apologies. Close enough.
Folks, we really
5 minutes in, we figured it out.
we really
Okay.
do know what we're talking about. I'm just going to say.
I want to bring in Mike
But that's
McKee
kind of
here.
the world we live in.
I
It's kind
forgot
of-
there were 31 days in May.
Okay, Mike
30
McKee,
days
come on in
September.
here. Save us because we've got a lot of economic data that
Mike
you've been
knows what
pouring
day it
over
is.
throughout the
There
day
you go.
today. Savings rate dropping to its lowest since 2008. Consumer sentiment falling. Consumer spending, though, holding up. And then we got some PCE data as well. Where should we begin?
Well, first I would say I can't believe you told Carol Monday's a holiday.
Michael McKee, you are evil.
See you at 9:30 on Monday, Carol.
But
That would have been funny.
I think we start with the spending because it shows the economy holding up. And interestingly enough, the spending on when you account for inflation, after you subtract inflation, the headline number was up 0.9, but the inflation adjusted number was up 0.7. So people were spending money. And the problem is, as you pointed out, Tim, the people were spending it on their savings accounts, which leaves us with some questions about how durable this is all going to be and whether or not we're seeing a last hurrah in spending as people spend down what they saved from the government and then will feel happy for the summer with what they've got. We did see pretty much mostly spending on goods, which is really surprising given we've been waiting to see that shift to services, but it hasn't happened yet. So that's kind of where I start. Now, everybody else is looking at inflation because the PCE inflation core index fell below 5%, which is a good thing, but that's kind of what we were expecting given the base effects that we've been looking for from last year. And so it's just the first time that we're seeing a kind of decline. So let's see if that keeps up. We've got a lot of action going on in Ukraine and China and lots of places that could change that dynamic.
Yeah, it is. It's interesting. I just do feel like we're at this point, like trying to figure out if we're turning the corner when it comes to inflation and so many other kind of troublesome metrics. So, Creedy, we're pretty much done with earnings. This was a big week for retail. Got a good feel on the consumer. How are you thinking about the markets and the trade right now?
Well, the trade is interesting, but also expected in a way. I don't think that those.
You mean the bounce back or what?
The bounce back. I mean, listen, this isn't necessarily a fundamentally driven trade. It's not even a healthy trade. If you see anything, here's your tell, guys. If you start to see 2-3% gains on the S&P 500 or the NASDAQ, that is not a sustainable rally. That is not a normal rally. So it really just leads to this idea that either there's light volume, either there's rebalancing.
There has been light volume on these updates, right?
There has been, and I mean that is natural. But also, I imagine a lot of people are taking advantage, perhaps, simply because of those rebalancing flows. So that's going to be a big part of it as well, especially going into the long weekend. I think I caution our listeners in the last, say, 30 minutes of trading. Do you want to go long into a long weekend?
Yeah, funny. But if they do. That to me is kind of a strong sign, even if it's on light volume.
Even if it's on light volume, but you know, I wonder how many people are even at their desks right now, and how many people already made these trades earlier in the week.
Wow.
You, me, and Tim.
Mike
and
is too.
not Mike McKee.
Mike's got desks all over.
My dad. But I got a great note from Ian Lingen at BMO this morning that said, "We're not at the SIFMA recommended 2 p.m. close, but it's close enough for government bond work."
I like that.
I think those guys were out of here. And now it's 2 o'clock. We're past the close. So everybody's on the road.
It's like Fred Flintstone, yabba dabba doo, right? Out the door. All right. Michael McKee, sounds like you got some sniffles, so take care of yourself. Michael McKee, international economics and policy correspondent at Bloomberg News, on the phone in New York. Creedy Gupta, you're headed out for vacation.
I'm so excited.
Have fun. You're going
Thank you.
overseas.
All right,
Be
we'll hold
safe.
down the fort here. Don't worry about it, okay?
Please do.
We will miss you. All right, let's get to world and national news and Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. The anger is mounting over the law enforcement response to the Uvalde, Texas shooting. Today, the director of the Texas Department of Public Safety, Stephen McCraw, said the commander on the scene thought he was dealing with a barricade situation and had time, not an active shooter situation with children at risk.
For the benefit of hindsight, where I'm sitting now, of course it was not the right decision. It was the wrong decision, period. There's no excuse for that.
Stephen McCraw says a tactical team of Border Patrol agents was on the scene at 12:15, but did not breach the classroom until 12:50. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. President Biden, during an address today to the graduating class at the U.S. Naval Academy, spoke of the importance of standing firm against brutality.
The president told the newly commissioned Navy ensigns and Marine second lieutenants they'll be part of an unmatched coalition of global allies galvanized by Putin's invasion of Ukraine.
Not only is he trying to take over Ukraine, he's literally trying to wipe out the culture and identity of the Ukrainian people, attacking schools, nurseries, hospitals, museums, with no other purpose than eliminate a culture. That's what you're graduating into.
The president also noted that the Navy personnel would help ensure freedom of navigation in the South China Sea and beyond. In Washington, Irv Chapman, Bloomberg Radio.
Donald Trump's lawsuit challenging New York's authority to investigate his sprawling real estate business was dismissed today by a federal judge. It's just the latest setback in his efforts to halt the 3-year probe. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. What is it when you look at me? You're like, Monkey Pox. What is that?
Well, we're talking Monkey Pox in a few minutes.
I know. Don't you feel like you wake up in the morning, I'm like, okay, now what? I feel like I want to put out a tweet on almost every story.
You know what, Carol?
Now what?
It certainly felt like that week.
It's just...
Good riddance to this week. That's what I'll say.
Crappy on air?
You can. You just did, and I'm okay with it.
It's just not good. All right.
Before we get to monkeypox, we're going to talk about some stuff happening in China.
And this is, we know the Chinese market so important, the Chinese economy so important to global growth here. And so it's really important that we all keep a watch on it. And there's a couple of stories. First of all, this one was like, whoa for me, and I want to start there. Beijing police detaining 17 employees of a COVID-19 lab for failing to test samples properly, blaming the infractions for worsening the outbreak that's enveloped China's capital for a month. So workers at the lab diluted samples to the point that infections may not be able to be detected. This is according to officials in a briefing that they did out of China on Friday.
Yeah, an official with the Beijing Municipal Health Commission said that it led to cases not being found and spawned the risk of further spread. The city is set to tighten supervision over labs, including daily inspections. We should note that mass testing has been a hallmark of China's COVID-0 approach, and officials have mobilized a legion of private diagnostic companies to help with the process. But inaccurate results, Carol, produced by some firms have led to uninfected people with false positive results being sent to makeshift hospitals in Shanghai and infections not being detected in a timely manner.
This difficulty in really getting COVID under control has really led to, it feels like, a little bit of a division in the government. President Xi on a mission to say we got to control COVID. And meantime, you have Premier Li Keqiang talking about concerns about the impact this is having on their growth.
In the meantime, violent clashes, mounting infections, and vacant factory floors. It's the turmoil that's engulfed tens of thousands of workers at an Apple supplier in Shanghai. It's a troubling symptom of China's extreme efforts to keep factories humming during its worst COVID outbreak since 2020.
These workers trapped in a bubble for almost 2 months, locked down by government decree and walled off from the outside world. This is quantum computers, mostly low-wage workers. They're demanding more freedom and beginning to revolt against their overseer, says People Familiar. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are rallying across the board in a month-end rebound. We have got the Dow, the S&P, NASDAQ at or near session highs. 72-point gain right now for the S&P, up 1.8%. The Dow Jones Industrial Average up 348, higher by 1.1%. NASDAQ up 306, higher by 2.6%. Today's gains coming ahead of a long holiday weekend for a lot of people. 10-year yield 2.73%. Spot gold up $1.68 the ounce to $18.52, up 0.1%. West Texas Intermediate crude up 0.8%, 115.04 a barrel on WTI. So again, recapping, equities push higher. S&P up 72, up 1.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. So Bloomberg's Elena Popina writes today that this time a week ago, the S&P 500 teetered on the precipice of a bear market. Since then, a pattern has emerged in which day traders, when they are awake, are refusing to push the gauge down anymore. What a difference a week can make.
Day traders to the rescue?
I don't know.
Elena Popina is equity markets reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studios right now. So what exactly is the data that we're looking at right now to understand what day traders are doing when the market is open?
We're looking at the performance of the market from 9:30 a.m. when stocks open to 4 p.m. when the market's officially closed.
So kind of the regular trading day.
The regular trading, right. So from the first bell at the open until the last trade at the close, stocks just keep going up. So we don't see any selling pressure. We don't see any, hesitancy in the stock market. We just see traders coming in and buying that dip, thinking that 7 straight weeks of losses in the S&P 500 have pushed us too far.
All right. On what kind of volume, though?
Volumes are really light this week. It's understandable. That's ahead of a 3-day weekend. But what traders are saying to me is that next week volumes would be even lighter. So all those short sellers who want to cover their short positions, now that they think the worst is over, they are better get doing it this week, because next week volatility is going to be crazy and position is going to be very light. Not a lot of volume, so things can move around in a crazy way. So everyone who wants to close their short positions, betting that the stock market is going to turn around and go up, are doing this most likely today and this week.
When you say the worst is over, do you mean the lockdowns in China are showing signs of easing? We're not getting as bad of data from Europe as we thought we would, those sorts of things?
Yeah, that's right. So China and news out of China certainly helps, but more importantly, markets are starting to see that we are kind of finding this middle ground between concerns about inflation and concern about economic recession. So we are kind of in between. The PCE data this week wasn't as bad as expected.
Right.
Some patterns on consumption show that the consumer, which makes a bulk of the U.S. economy, is really strong. So that kind of gives investors some kind of optimism that maybe that sell-off was just overdone.
But as you know so well, that investor sentiment can turn in a dime. Look at where we were a week ago, and I think about some of the comments from the CEO of Macy's. Like, things look good really nice right now from a consumer basis. They're not worried about bad debt. But he is thinking about like what's to come, that maybe it can't continue. I think about what Mike and we just talked about, right? That in terms of consumer spending, it's happening, but consumers are increasingly tapping into their savings to do it. At some point, those savings run out.
Right, and at some point they will have to start, spending less on discretionary items and maybe travel less. We saw the data on airline tickets. There is a 16% increase in prices from a month ago. So
Yeah.
I'm not sure about that summer traveling, if that's going to help the economy or not. But yeah, there is this tendency of consumers tapping into their savings account a little too fast. So that helps the economy on the one hand, but
Right.
that,
It runs out.
Right, at some point, the well is going to get dry. So what are you going to do then?
Great story today on the terminal by Olivia Rockman and Mr. Lane Gaffopoulou about consumers and how much they're spending on travel, because travel expenses have become so high due to increasing costs of airfare. And Olivia came on Quick Take earlier today and said that she was choosing between a Europe trip and a trip to Oregon because prices were so high. $800 for her to fly round trip to Portland, Oregon.
So she's
later
like,
this
why
year.
don't I just go to Europe?
Well, no, she's just going to Oregon, not even going to Europe as a
okay.
result
I thought
of
you were
it.
going to say it was going to
So
be like
there's that
comparable.
demand destruction that you're starting to see, at least anecdotally, because of these high prices. So, Elena, what does this all portend?
Does that benefit then the domestic economy versus the overseas economy, right? Couldn't
Yeah,
it?
you're right
yeah,
there.
I don't know.
On the other hand, we live in this interconnected world, and European economy is go through rough times right now. Think about this war between Russia and Ukraine. Think about all the uncertainty about rising gas prices and oil uncertainty. So that kind of weighs on European economy, which reverberates into the U.S. economy. So on the one hand, it's good that she's going to Oregon, but maybe some international travel is going to help with the economy to some extent.
One thing I think is interesting, and Tim and I have been talking about this with our TV colleagues, that in terms of the rally we've been seeing, it's very broad-based. You watch the markets day in and day out. What other metrics, are kind of standing out for you, whether that it's broad-based rally or anything else that tells you maybe kind of where we go from here?
I look a lot at the metrics that's called volatility of volatility, the so-called VVIX index. So it is on the downward trajectory, and that's a good sign. That means that the second derivative of volatility is seeing a downward pressure, which means that because it's a forward-looking mechanism, it tells me that investors aren't positioning for more price swings as the summer progresses. So, yes, we had 7 rough weeks in the S&P 500. For the Dow Jones, that was 8 straight down weeks in a row. That ties for the longest downward streak ever for the Dow Jones Industrial Average. And how much worse can it get? So,
do we care about the Dow? Forgive me. I'm just thinking about Romaine. I know Romaine is like, I'm channeling Romaine.
I care
Bostic.
about the Dow.
I care about the Dow too, but do we care? Or what is the important metric?
The Dow Jones is, it's a perfect gauge of the largest industrial companies. So your old blue chip companies, you don't have high flyers there, but you have a lot of companies that are very important for the economy. So that index was down for 8 straight weeks in a row. That tells you a lot of selling pressure is going on there.
We shall see. We'll see what next week brings and the week after. Elena, thank you so much. Always great to get your insight in terms of what's going on in the markets because you follow it minute by minute, tick by tick. Elena Popina, she's equity markets reporter at Bloomberg News here in our Interactive Brokers studio. And, Tim, I just got to say, I'm looking at those major equity averages taking another leg up. So we are at our best levels of the session. So up 1.8% on the S&P 500, up 1.1% on the Dow, and the NASDAQ charging ahead by 2.7%.
Yeah, taking a deeper look into the S&P 500, all 11 industry groups are higher, being led right now by information technology up by 2.8%. Consumer staples up by 0.5 percentage point.
All right, interesting. All right, you are listening to Bloomberg Business Week. Carol Master, Tim Stenbeck. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser, Tim Stenovic, live in our Bloomberg Interactive Broker Studio, streaming on YouTube, focused on the markets, but we're also focused on what's going on when it comes to all of our health and those cases now of monkeypox that we're seeing in the United States. I really want some context to understand exactly what it is and what do we need to be concerned about.
Yeah, for that, we're going to check in with Dr. Ian Lushbader over at NYU Langone Medical Center. First, though, let's get a check of the trading day. We got less than 90 minutes to go, Charlie Pellett.
Indeed, we have got the Dow, the S&P, NASDAQ all advancing. And as you say, Tim, 90 minutes to go until we wrap up a week. Going to be a big week to the upside for U.S. equity markets. Just getting word that New York, though, is reporting 8,543 new virus cases. New York is reporting 23 new COVID-19 deaths. New York patients, number hospitalized, has fallen by 35 to 2,483. It is an up day as stocks continues to rebound from a steep sell-off that drove the market to near oversold levels, with rebalancing from institutional investors potentially lifting equities at the end of the month. All major groups in the S&P 500 are higher. Broad-based rally with the Russell 2000 up by 2.3%. The NASDAQ Composite Index now up 2.6%, higher by 308 points. The S&P at the end of the week up now by 72 points, above 4,100, up 1.8%. The Dow up 358, up by 1.1%. Liz Young is head of investment strategy at Social Finance Inc., and she told us this morning on Bloomberg Television and Radio investors are more concerned than ever about individual data points.
A lot of investors today have become much more short-term focused because we're hanging on data points every week. We're watching the market every day, and when you have big swings like this on a daily basis, it does cause people to be much more short-term focused, whereas financial advisors and maybe more experienced investors or ones of yesterday are more concerned with a 5 to 10 year period, diversification, traditional asset allocation.
After earnings, Dell Technology shares are surging 11.7%. Gap is trading higher by 3.3%. It did lower its full-year forecast, but we do have shares advancing by 3.2%. Another retailer reporting, Costco, up now by 0.9%. So again, recapping, the Dow, the S&P, NASDAQ, all higher. Spot gold up 0.2%, $18.54 the ounce. Cannot ignore crude closing in on $1.15 a barrel ahead of the long holiday weekend. $114.64 on WTI, up by 0.5%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, earlier this week, President Biden saying that monkeypox shouldn't bring about a COVID-19 level of concern. Cases of monkeypox, though, we have seen it, at least according to the U.S. CDC, 9 cases, I think, as of yesterday across 7 U.S. states. That includes California, Florida, Massachusetts, New York, Utah, Virginia, and Washington.
Dr. Ian Lushbader is clinical professor of medicine at NYU Langone Medical Center. He joins us on the phone from Long Island this afternoon. Dr. Lushbader, how are you?
Hey, guys. Happy Friday.
Yeah.
A new wrinkle in life, right?
Yeah, exactly. Happy Friday to you. Hey, Dr. Lushbader, how concerned should we be about monkeypox?
I don't think we need to be very concerned here. It is a very uncommon infection, more common in West Africa. It's a DNA virus, very distantly related to smallpox, much, much milder, and probably came from a traveler to West Africa to Europe, where they have a little bit more of a problem. They have at least 200 cases, probably over in 20 countries. So that's more of an issue. At least 100 cases in Spain, the UK, Portugal. There's one case in Buenos Aires. So we're definitely seeing more of a European spread. Most people who are not immunocompromised will do pretty well with this. And the case that's in New York, at least according to my sources, turned out not to be monkeypox, but probably chickenpox, a different virus, but can appear similar, with these vesicles, fever, chills, headache, is really the common presentation. Typically, you get swollen lymph nodes in monkeypox, but so I think the case in New York is is less to worry about. But, this is early on, and it can spread. But I think it's going to be much less of a significant problem.
So there have been, at least according to the CDC, that most of the cases, I guess, here in the U.S. are within gay and bisexual men and other men who are having sex with men. So it's interesting, like, in terms of how it's transmissible, is there something that we need to be aware of? Or, yeah.
So this is really transmitted, like many viruses, pretty much by skin-to-skin contact, which is why it seems to be more common in men who have sex with men. Probably originated in part from Europe, coming to the United States, and these big raves in Spain and Belgium, where there was a lot of sexual activity that was related to that, and probably some people came to the United States. It can also be transmitted by coughing or respiratory droplets. So if anyone is sick, they should be careful, and certainly we should, be cautious with people who are sick or have these vesicles that do look a little bit like chickenpox. They're these clear vesicles that appear typically on the extremities, the arms and legs. So it is direct contact, but also respiratory. So if someone is coughing, please wear a mask, and I would certainly try and avoid that. But at this point, it seems to be in a very small number of patients, but I'm sure we're going to have more cases in the U.S. as a result.
Dr. Lustbader, thanks to our coverage over the last couple of years and what we've all experienced as a result of the spread of COVID, I'm wondering about healthcare facilities and if we need to be on the lookout for perhaps hospitals being at capacity due to monkeypox in certain parts of the country. Does that happen?
I don't think people are being hospitalized now if they're suspected just to contain it. But I don't think we're going to be straining our healthcare system. Most of this is self-limited. Most healthy people get over it. People who've had the smallpox virus, which we stopped giving out in the late 70s, 77. So there is a group of older people who've been immunized against smallpox, and that seems to be about 85% effective against monkeypox. But obviously we stopped that vaccine when smallpox was eradicated, in 1980. So there's a big group, obviously, who've not been immunized against smallpox because it was eradicated. And so those people are susceptible. Again, and we do have vaccines that are being given to close contacts. In other words, if someone is diagnosed with monkeypox, yes, everyone around them should be vaccinated. And we do have some antiviral treatments. But I don't think this is going to be a widespread. There's no indication to give everybody now smallpox vaccine or monkeypox vaccine. Certainly not at this point.
It's like, when will it stop? That's kind of how I feel. Just like one thing after another. Ian, always good to check in with you. Have a good and safe weekend and holiday weekend. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center, on the phone in New York City.
So I'm glad he said we don't need to worry about it. I can take that off my list of worries, Carol.
Yeah, I know, right? There's the list is unfortunately really long. And a lot of it has to do with what's going on around the world, around the country. For that, let's get an update from Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Congress is on a Memorial Day break, but bipartisan negotiations are expected to continue on coming up with some sort of compromise bill to address gun violence. Bloomberg government's Jack Fitzpatrick is following those talks.
It's nothing that would, drastically reduce the 400 million guns in America. It's not something that gun control advocates would necessarily get excited about, but those conversations are happening to see what they realistically could get through the Senate with 60 votes.
Bloomberg government's Jack Fitzpatrick. The House Oversight Committee is demanding information about the marketing of assault weapons from leading gun manufacturers. Committee Chair Carolyn Maloney says they're concerned that the companies continue to market assault weapons to civilians, reaping a profit from the deaths of innocent Americans. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. President Biden is commending the U.S. Naval Academy's class of 2022 for persevering during the pandemic.
When the global pandemic forced everything, literally everything, to change. When you were told not to return after spring break as youngsters. When your second year, you weren't allowed to see anybody other than your roommate.
Biden told them they are graduating as leaders and said those are easy words to throw around, but hard to accomplish. America's goods trade deficit narrowed in April to $105.94 billion. That is an improvement from March, when the deficit was just under $126 billion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much. Nancy Lyons in our Washington, D.C. newsroom and bureau on this Friday. Hey, we're going to tell you about an interesting story that's in Bloomberg Businessweek magazine in just a moment, and basically has to do with how you as investors, we as investors, can actually place some bets on events. However, this next story we're going to talk to you about would probably be one of those events you couldn't make an investment bet on.
Yeah, this story an exclusive because Boris Johnson, the UK Prime Minister, spoke to Bloomberg Television in an interview, and he urged missiles for Ukraine to hit, quote, crocodile Putin, urging more military support. This is Boris Johnson for Ukraine as it battles Russian forces, including sending advanced weapons such as multiple launch rocket systems that can strike targets from a far longer distance.
You know, it's interesting. The British Prime Minister airing his support for more arms for Ukraine as he pushed back against the idea that with the war now in its fourth month, remember when everybody thought this would be short? Well, we're in our fourth month. Anyway, he was pushing back against the idea with the war now in its fourth month that President Zelensky should focus instead on reaching a peace deal with Russia that could see Ukraine cede territory. You know, many would say, many who are watching these geopolitical events, many people who are experts when it comes to global policy would say, if you concede now, we've already conceded once, right, with the Crimean Peninsula.
Exactly.
When it comes to Putin. If we concede again, what's next?
Yeah, and you know, you said, Carol, that here we are in the fourth month, and
Shocking.
you know, early on we were featuring interviews with specialists who anticipated that this would be a conflict that would be weeks long, and that Ukraine would not be able to hold its own. Well, that certainly hasn't happened. Russia has been cut off from much of the Western world, and support.
India and China, they're still taking their oil.
Exactly, a very good point.
Just going to say, sorry. But you know,
much of the Western world.
Right. But no, it's a good point, right? It's really upended, certainly the global energy markets, and alliances are being rethought as well. But certainly this leader weighing in, and I think a lot of leaders have been very careful in terms of support and how they voice that support. But 4 months in, Tim.
Yeah, it's remarkable that it's been this long. It also means that it's wreaked havoc on energy markets as well.
All right, coming up, we're going to get to a story that you're going to find very interesting in the new issue of Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A Friday rally, a winning week into a long holiday weekend. All major groups in the S&P 500 index are higher, with the gauge poised to halt its longest weekly slide since 2001. Stocks are continuing to rebound from a steep sell-off that drove the market to near oversold levels. S&P now up 74, high of the day up 1.8%. The Dow up 360, up 1.1%. NASDAQ up 317, a gain of 2.7%. 10-year yield 2.73%. Keep it locked into Bloomberg Radio to see how things shake out in the final hour of trading. 10-year yield 2.73%. Spot gold up $2.70 the ounce to $18.53, up 0.1%. West Texas Intermediate crude up 0.7, $114.92 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, in the new issue of Bloomberg Business Week, this also is a story that happens to be the Bloomberg Big Take today. It's a story about the ability of investors to place bets on almost anything. We're kind of having some fun in our chat about betting on Monkey Pox or whether it's going to rain this weekend. Essentially, we're talking about trading instruments tied to outcomes of real-world events.
The story by Liam Vaughn and Benjamin Bain, as Carol mentioned, it's featured in the new double issue of Bloomberg Business Week magazine. It's available now on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. Liam Vaughn joins us now, projects and investigations reporter for Bloomberg News. Liam joins us on the phone from London. Also with us is Joel Weber, the editor of Bloomberg Business Week. He joins us on the access line from Brooklyn. Joel, one of the things that I love about this story is exactly what you and me and Carol were doing just now in the chat, the origin story here, and how the two founders a couple years ago realized that while they were interns at Goldman Sachs and at a hedge fund, people were making bets on pretty much everything, but there was sort of no unified place to do it.
It's funny that you mentioned that, because Carol and I had a bet that you were going to ask me about this.
Who took which side?
Yeah, it was kind of a no-win bet. So look, in the U.S., the CFTC. The jurisdiction is divided of regulatory between CFTC and SEC, and it depends on what that business kind of looks like. Sort of this prediction market has long been something that is in the CFTC's court, and they have always declined. There's a big, long checklist that they go through for any venture that's wading into these waters, and everybody always gets declined. And then comes a startup called Kalshi. And Liam, you take it from there, because they managed to get through with a VC backing tons of money. It is currently live, Kalshi.com, and you can basically bet on almost anything. How did they do it?
Yeah, I mean, that's really the focus of our story, that, you know, there's this long history of people trying to get these things off the ground. Like, anyone that's kind of studied, like, finance or those type of subjects at university is aware of prediction markets. And there was like this book that was a bestseller that came out about the wisdom of crowds. So there's this kind of theoretical sense that these things have got a lot of potential, but the CFTC was more inclined to sort of see the risks. For one thing, you know, you're not supposed to be able to gamble on futures markets. There's a kind of specific stipulation that futures contracts shouldn't be akin to gaming, is how it is in the rules. And the other thing is that it shouldn't be vulnerable to manipulation and cheating. So what these two, very young, very impressive entrepreneurs managed to do is convince the regulator in a way that nobody had previously that their exchange could be safe, and that actually it was really legitimately a form of hedging risk, and it wasn't just about gambling by another name, essentially. We obviously interviewed them at length, and to be honest with you, they're incredibly impressive individuals, super, super smart, incredibly well-backed, as ambitious. It was like looking at Mark Zuckerberg before Facebook became Facebook. So I could totally see how they had the drive and the charisma to pull it off, really.
It reminded me a little bit, Liam, of Robinhood, which was a company that Business Week covered early on, and really, ended up upending retail trading, even though it maybe took almost a decade for the business model to get there. So who are those co-founders?
Yeah, so there's Tariq Mansour and Luana Lopez Lara. They're both 26 now, and both of them came to the US, essentially to go to MIT. Both of them had this kind of pretty equivalent upbringings to each other. They were put in for, they were just super kids, put in for the math Olympiads and were just acing it, knew they wanted to get into MIT. Lara was a professional level ballet dancer. She actually was in the Bolshoi in Brazil and decided to turn her back on that and, go to MIT. And they, the way they tell it is they were destined for careers on Wall Street. And then they had this idea, and it just kept sort of bugging at them. And the more they kind of thought about it, the more it's almost got a kind of a beautiful simplicity that, the way they tell it is like, if you imagine that you're a fund and you've got exposure to Brexit, well, up until now, you might have to kind of hedge that position with a basket of different instruments, whereas their thought is that in the future, you should be able to just essentially take a position on whether Brexit will happen. And it's a kind of pure hedge, and it takes away that complexity.
Liam, what's not allowed on the platform?
So sports betting isn't allowed, although interestingly, the argument was that sports teams need to hedge whether they're going to win or lose a game, so therefore they should be able to do that on a futures exchange. That wasn't successful, but it wasn't far off. Other things you can't bet on are, at the moment, elections, and that's the really big one. If you look at other kind of prediction-style markets, they've all, the biggest interest has always been elections, and particularly, presidential or general elections. Cauchy, I think, quite wisely thought that they would do this incrementally, get the license first, get some stuff on there, but reading between the lines, I think they're very keen to do that. But I think politically that will be a bit more of a struggle. Our reporting suggests that some of the Democrats see that as a bit of a red line. But the CFTC, you have 5 commissioners and they're decided by the president of the day. So if you have a situation where, you've got a Republican in the White House, then you can very easily imagine a situation where that gets passed. And once it's through, so.
So Liam, what could possibly go wrong?
Well, that was one of the really interesting questions. And one of the things that our reporting showed is that there wasn't universal approval of this stuff within the CFTC. There's a kind of division called the Division of Market Oversight. And when they looked into these markets and when Cauchy sort of approached them, they were very skeptical. For one thing, they were concerned that this was just very easy to cheat. So, for example, Cauchy wanted to do a contract on whether bees would be put on the endangered species list. And the CFTC's response to that, these kind of naysayers were saying, well, look, there's going to be a division, and there's going to be a kind of small unit or an individual even that makes that call. And if you're putting millions of dollars on the line, you can really easily imagine that people will be pressured and potentially bribed to change reality. And the other thing is insider trading, in the sense that if you've got all these different markets, imagine you've got a market on whether Kanye West is going to release his album next week. There's a big pool of people that know the answer to that aren't necessarily like his brother or his, so it's actually quite hard for the regulators to track that, having so many different markets.
Yeah.
So they're some of the concerns,
Hey, Liam, last question for you. How much money am I willing to bet on whether or not Tim or Carol will speak next?
Liam, you've got 10 seconds. I win.
Well, it sounds like Joel won.
Oh, my God. Okay, Liam, so sorry we had to run. What a great story. It's in the new issue of Business Week. Our thanks to Liam Vaughn, who wrote the story, and, of course, our editor of Business Week. He is Joel Weber. This is Bloomberg.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session, in your trading week. Caroline Hine, Romain Bostic, Katie Greifeld in the house for Taylor Riggs, joined now by Carol Massa and Tim Stenovic. We go across all audience, of course, TV, radio, YouTube, with the sound of New York helicopters whirring ahead as people get ready for the Memorial Weekend in a rather more luxurious way than some others. I'm looking at volumes down 21%.
Caroline?
Sadly not the way I travel, that's the way some do.
Not the way I travel either, but apparently.
But there's some heady heights being hit in stocks, but not any volume.
Yeah, no, right. That's a really good point. I mean, but it is interesting to see some buying ahead of this long holiday weekend. The other thing that I find as a standout, I'm thinking about some of the weekly performances, and those bank stocks, man, they've been on a tear this week. They're up about 8.5% for the week overall. Remember, it was just on Monday that Jamie Dimon of JP Morgan Chase talked about these storm clouds over the U.S. economy maybe dissipating. That day alone, we saw bank stocks up 4%, but the rally has continued, Tim, throughout the week.
One area where we're kind of seeing something different happening is crypto. Over the last couple of days, we have seen Bitcoin and stocks actually move in a decoupled way. They're moving in different directions. And it hasn't been happening over the last few months. So there has been a relatively strong correlation, except for the last couple of days. Bitcoin today down 3.3%.
Yeah, and NFTs not getting any love either, it would seem. Let's try and be on the glass half full kind of side of it when you're looking at stocks at the moment. Crypto on the downside, tech stocks on the upside as we currently see, really outperforming today, 2.8% to the good, 333 points on the upside. Meanwhile, S&P 500 up almost 2%, that's 80 points higher. Every industry group in the green. You're looking at the Russell 2000 up 2.4%. So once again, big caps on the small side, really in the outperformers of choice. Dow Jones up just 1.25%.
And if you look at the sector level, it looks like everything is just rallying all together. You have all 11 sectors higher right now. Tech out in front, leading the charge, 3% rally there. And again, every sector is rallying, but if you look at the downside, what's underperforming, it's all your defensive sort of sectors. You have consumer staples, utilities, some of the laggers today.
Yeah, well, still 95% of the stocks in the S&P 500 are higher on the day. The biggest mover is Ulta Beauty. Second biggest is Autodesk, the software company, did report those fiscal first quarter numbers, and they were good. And they also came out with, I guess, slightly better than feared forecasts here. That's underpinning those shares up about 9% on the day. And Tesla actually having a pretty phenomenal week. Remember, what was it, on Tuesday, they were down around $620 a share, and everyone was saying this thing was about to spiral completely out of control. Gaining back some of those losses here. I think it's up something like 13 or 14% now on a weekly basis, 7% here on the day, though still at 755, well off those $1,000 plus prints that we were seeing just a few months ago. Now, to the downside, there are a few things, as Katie likes to look at the downside only. Medtronic did report revenue for its fiscal fourth quarter. We talked about this yesterday here. It's down again for a second day. Meanwhile, Albemarle higher by about 6%. In fact, a lot of the materials names moving higher here, not only on the day, the week, but also on the month. Albemarle actually one of the biggest movers in the S&P 500 so far in May.
Meanwhile, though, let's look at how we are on the up. I mean, it comes overall to
right. Is that what your helicopter?
Yeah, that's what I was thinking about.
And you take that to where you on Parsonage Lane down in the Hamptons, and it just drops you off in your backyard.
Wow, you know a lot about the Hamptons. Maybe you're using helicopters. No, I don't know about that.
If only I was hopping on that helipad. Give me an invite. Meanwhile, I'll tell you what's hopped on the helipad of this week is finally some inflows into stocks overall. We find after, 10 straight, we saw finally some sort of inflows after 10 weeks, and we've finally seen some sort of positive movement in the benchmarks for the first time in 8 weeks, and that was after the longest losing streak for the benchmarks in the US since 2001, more than 20 years. So finally, we do see this turnaround, and it's been systematic, but the question is it rebalancing, dare I say?
Yeah, does it stick, right? Well, we're talking about helicopters a lot, so helicopter money no more, certainly by the Federal Reserve, right? As they continue to raise rates and the balance sheet, rolling that off. Keep in mind, we're 2 weeks away from that next Fed meeting. And in thinking about what comes next, Mohamed El-Erian, he's a Bloomberg opinion columnist, he talked about the Fed being in a very tricky situation. He said it's kind of like being between a rock and a hard place. Check it out.
I think the Fed is going to have to decide between two policy mistakes. Hit the brakes too hard and risk a recession, or tap the brakes in a stop-go pattern, including pause in September would be an example of that, and risk having inflation well into 2023.
And of course, that's Mohamed El Arian, Bloomberg opinion columnist, talking to our team earlier on Bloomberg TV. He's also an advisor to Allianz and Gramercy. But I mean, you look at the data points, Romaine, and consumer spending continues to stay strong. We heard from a lot of retailers this week, but they're dipping increasingly into savings, and you wonder how long that can continue.
Yeah, I was really looking at that savings picture, and I don't know. I mean, maybe there are better people, better economists than me who sort of say, okay, you shouldn't pay too much attention to that, as it doesn't necessarily feed through in the exact same way. But when you look at that uptick in savings, the uptick in credit card spend, you wonder how much longer then does this resiliency that we keep talking about, how much longer does that last? At some point, you max it out, right?
But arguably, the Fed maybe doesn't want to see that resiliency. Again, sorry to jump ahead of you, Tim, but you think about sort of...
That's okay, I do it all the time.
But if you think about what the Fed is trying to do, they're trying to cool that demand. And the fact that the consumer is still spending money, especially in the face of all this inflation that we're seeing, maybe it's not the best thing, at least from the Fed's perspective.
Yeah, I agree with that. And I think one thing we also have to keep in mind is there any idea that energy prices will actually come down in the near future? Because if we do indeed see a hot summer around the world, go ahead.
Well, I mean, have you looked at like pump prices? Have you looked at energy prices?
Yeah, going into Memorial Day weekend, they're not coming down. Yeah, but and it's not necessarily tamping down travel at this point.
You know how much it costs to fill a helicopter?
I haven't. If you have to ask, you can't afford it.
Yeah.
Okay? That's what they say.
Do all of our parents say that? They all do, right?
Yeah, but if we do not see energy prices come down, then I'm concerned that we're going to continue to see inflation, and it's hitting the consumers at the lower end of the income
just
spectrum.
Real quickly,
worse.
we did actually get that data, that sort of 4-week rolling data that shows gasoline demand, and that is actually down here. So it does seem that you are starting to see this in the data.
Yeah,
that people are making that trade-off.
Did you see fertilizer prices have also just plummeted because of demand destruction there? So we're seeing some pullback there too. But there are certain staples here too,
That
right?
should be. I was just thinking, I wish I had a lawn to put that fertilizer on.
So let me get straight.
Food
Caroline's got a
prices, though.
helicopter. Carol's got a yacht. Katie's got like a stable of like Clydesdales or something.
Yeah, I'll
How do
see you
get
on
to
the
work,
subway
Tim?
on the way home.
I'm just taking the
He's
dollar.
a bike. He's a cyclist like me.
I'll just take the city bike home.
Actually, though, I've got a train ticket, extraordinarily expensive. So there are inflationary pressures are absolutely everywhere. But the question is how you support the consumer in this time. When does the government step in? We've seen, I thought it was a really interesting story of the week, the fact that the UK, most affected by stagflation, has been taxing a windfall tax on its energy companies to be able to pay to subsidize the energy costs of its users. So, I mean, watch out, capitalism to a certain extent in certain countries.
Yeah, that's a really good point. We have to think about this globally. All right, folks, we're going to be back in less than an hour's time. We're going to wrap up the trading day and the trading week and the trading month, right?
No, we got another day on
Tuesday,
Tuesday, Carol.
I keep
You're getting ahead of
confusing
yourself.
this. I know. I know. I'm sorry.
Wishing away May.
I know, exactly. All right, we'll be back with Beyond the Bell right here on radio, TV, and YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I do think a lot of people are probably closing out their positions here, especially if they're taking off next week, maybe.
So
maybe
rebalancing?
Yeah, I think you might just do it now, right?
I don't know.
Especially
That's
if
a good question.
If you're taking
That's
off,
a good question.
Right, Elena Popina said volumes are going to be even lighter. She said short sellers were really kind of doing their thing this week because more concerned about some volatility next week on lighter volumes. So I don't know.
It has been pretty remarkable to see some of the individual moves. Romaine talked about Tesla and the rise in Tesla that we saw in the last couple of days.
13-14% this week.
Yeah, that's significant. But you also have to ask if what did we see? What did we see the dip? Did we ultimately see the bottom or the low, at least of this cycle, this week or last week? That's not what a lot of our guests have said.
You know what Snap is, though? It's down 34% this week. Is that possible?
Yeah.
It is, right?
They had a terrible earnings
I was
report
thinking about Mandeep Singh that said, at some point you look at this company, you look at the fundamentals, you think about, right, how big their user base is.
Hundreds of millions of users.
Right? And then at some point you think, okay, wait, there's value there, unless that starts to come undone. And I do wonder if investors are starting to look at individual names and saying, okay, wait a minute, this is what this company's about, whether it's a Tesla or somebody else.
Like Alan Petrikoff, what he said about Netflix to us.
Exactly.
The decline in Netflix's value, he was looking, he was in the studio with us, and he was kind of blown away by how low it was trading.
And if times get tougher, the stronger players tend to survive. Pick your industry, and whether or not that means there's consolidation of some of the little, or smaller players, or whether those smaller or little players kind of go away. I mean, this is what could be potentially happening if the overall market environment gets a little trickier.
So who buys Netflix?
No, well, or maybe who do they buy? That would be a big purchase. All right now let's get back to world and national news. A lot going on, a lot of tough stuff. Nancy Lyons on it in D.C. Hey, Nance.
Thanks, Carol. Texas Department of Public Safety Director Stephen McCraw admits there were multiple police errors that occurred before and during Tuesday's school shooting in Uvalde, saying the incident commander wrongly believed the incident had transitioned from an active shooting into a barricade situation with no children at risk.
A decision was made that this was a barricaded situation. There was time to retrieve the keys and wait for a tactical team with the equipment to go ahead and breach the door and take on the subject at that point. That was the decision. That was the thought process at that particular point in time.
McCraw says, of course, that was the wrong decision, and more than 30 minutes passed before they entered the classroom. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. Well, the Allies are stepping up shipments of heavy weapons to Ukraine, which British Prime Minister Boris Johnson says should include rockets that can strike targets from longer distances.
Prime Minister said Putin's forces are slowly pressing ahead.
He's continuing to make gradual, but I'm afraid palpable progress. It is absolutely vital that we continue to support the Ukrainians. What they need now is rocketry that will enable them to defend themselves against this very brutal Russian artillery.
And as to the prospect that Putin will grab a chunk of Ukrainian territory and then offer to negotiate.
How can you deal with a crocodile when it's in the middle of eating your left leg?
Johnson said Putin is in a position to declare victory to the Russian people, whatever happens in reality. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much. Nancy Lyons there in our 99.1 newsroom in Washington, D.C. So we're going to get up and talk with Grayscale Investment CEO Michael Sonnenschein, back with us in just a moment. Curious what he has to say about really the carnage that we've seen in the cryptocurrency world. And in keeping with that, our Joanne Ossinger has a story.
Yeah, Fundstrat says that crypto trading may, quote, get weird over Memorial Day. Don't forget that this stuff trades 24/7, okay? Cryptocurrencies are probably headed for more bouts of downside volatility, and investors should consider reining in their risk. That's according to Fundstrat.
Bob, there's burgers on the grill. Get away from trading.
I gotta buy or sell my crypto.
That's what's going to be going on. Or Sue, come on, the hot dogs are ready. Buying put protection on long crypto positions and cutting exposure to more speculative altcoins, are a couple of safeguards, according to Sean Farrell, head of digital asset strategy at the financial research firm, putting out a note yesterday.
Liquidity has been low and could tighten further over the U.S. Memorial Day holiday, while leverage in the Bitcoin market is increasing. That's according to Farrell. The market outlook also remains unfavorable to risk assets as the Federal Reserve hikes interest rates and starts quantitative tightening. He said, well, Carol, that certainly isn't today, at least the risk assets of U.S. equities. Risk assets like crypto are down.
Yeah, right, exactly. And liquidity has been low and could tighten further over the U.S. Memorial Day holiday. I mean, this is where, risk reward. There are opportunities depending on where you get in or get out on the trade.
Well, let's go back in history a little bit, because crypto market volume dropped 43% during the Memorial Day period in 2020 and then dropped 35% during the Memorial Day period in 2021. Activity is likely to be, quote, extremely low again this year, Farrell wrote, with institutional trading largely absent on holidays. Outsized price swings are possible, he said.
Well, it's interesting. Elena Popina just talking generally about financial markets earlier, saying the reason the short sellers are getting out is because they are anticipating more volatility in general next week. If there's more volatility overall in financial markets, I would assume that you'll see a lot more volatility too in the crypto market.
Okay, we're going to be talking with Michael Sonnenschein in just a few minutes. Fundstrat, for its part, expressing optimism about the longer-term outlook for digital assets.
All right, time will tell. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We're looking at an update for the Dow, the S&P, and NASDAQ. We have got buying into the close here. 43 minutes to go, but the Dow, the S&P, NASDAQ, best level of the day as we head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with the bid from the start today, with the Dow currently up 443 points. S&P's gained 85. NASDAQ is higher by 345. The U.S. 10 yield at 2.74%. Gold is up 3. Oil is in the green, but Bitcoin is down by 3.3%. Among the main 11 S&P sectors, all were in the green, led by gains in tech and consumer discretionary. Leaders to the upside in the Dow, Apple, Disney, and Boeing. After earnings, Big Lots fell as much as 16%, but Costco reversed losses, is now up by 1%. In other news, the AP reported that the Iranian Navy has seized 2 Greek oil tankers in the Persian Gulf. And wrapping things up, Lowe's boosted the dividend to $1.05 a share from 80 cents. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, how much Bitcoin you have?
0.
Oh, okay. Just checking.
And how about yourself?
I got zip.
Yeah.
I know.
Less. Everyone's got less than they used to.
Notice how Tim's quiet?
Yeah. Yeah.
All right, well, Bitcoin is regaining its dominance of the cryptocurrency universe. It now accounts for 44% of total crypto market value. It's the most since October, just before the latest bull market peak. This is based on data from CoinGecko, and Bitcoin's renewed hegemony. I knew I didn't say that right. Is a reflection of how the collapse of the Terra USD stablecoin earlier this month really ravaged smaller tokens like Avalanche and Solana.
It's good to have back with us Michael Sonnenschein, the CEO of Grayscale. He joins us this afternoon on the phone. Michael, how are you?
I'm doing great. How are you guys?
We're doing well. It's good to have you back with us. Hey, I want to start with something interesting that we're seeing with Bitcoin and actually crypto overall today. For quite a while, we've seen the correlation be really close between risk assets like crypto and stocks. But we've seen a break in the last couple of days with Bitcoin continuing to move lower, while tech stocks, specifically the NASDAQ 100, and overall U.S. equities have moved higher. What do you make of this breakdown of the correlation?
I think it's a little early to have any truly informed view of this. What we certainly have seen over the beginning part of this year is crypto is relatively range bound, but as the U.S. began to rise interest rates and there were fears around further inflation, we did see somewhat of a liquidity crunch and a lot of leverage coming out of the system that I think has led to not only volatility, but also a pretty precipitous sell-off across pretty much every asset class, including crypto. So I don't necessarily think that there's anything that could have been sheltered from this recent downturn. And a little bit too early yet to talk about correlation and causation with crypto as compared to what's happening in tech at the moment.
Well, when you talk about too early, I do wonder if when we talk about the world of crypto and throwing in blockchain as well, I was talking with the CIO of Bitwise Asset Management earlier and a partner over at Castle Island Ventures. They invest in public blockchain companies. This was for an upcoming discussion we're going to have.
That sounds like a good discussion.
I will tell you more later, buddy.
But
anyway,
I didn't know this.
But what he was saying that we have to, one of the topics that came up was that we have to think about the crypto world, and mind you, this is their world, but kind of akin to when the internet in the early days. And so there's going to be some starts and stumbles. How do you see it? Where are we in kind of the development stage when it comes to crypto?
Yeah, so I know the gentleman you're talking about quite well, and I actually share their views on this. I think that a lot of people, including us at Grayscale and a lot of the investors we deal with, certainly do think about where we are in the evolution of crypto's development to being akin to the early days of the internet. There's going to be winners, there's going to be losers, there's going to be precipitous movements in price to the upside and to the downside. There's going to be new events, there's going to be companies that fade away, and there's going to be major successful winners. I think sometimes just because crypto is moving so fast and these days information moves so fast, we sometimes forget that Bitcoin has only been around the last, 12, 30 years. Pretty amazing how far it's come so far.
Hey, Michael, and what is pretty amazing, too, are the different regulations that we see around the world. Just a few weeks ago, Grayscale launched a crypto equity ETF in Europe. Why did you do that rather than not just an actual physical Bitcoin ETF? After all, spot Bitcoin ETFs, they are allowed in Europe.
Well, at Grayscale, we've certainly had our DNA and very much become known for our crypto direct offerings here in the U.S. market over the last 8 years. And earlier this year, we actually launched our first thematic equity ETF in New York, the Grayscale Future of Finance ETF. And it's actually not necessarily what we would call a crypto specific or blockchain specific ETF. It actually offers exposure to a totally new category that we define as the digital economy. And as we saw the positive reception the fund got in the U.S. market launching this past winter, we really thought it would be an opportune time to bring it to the European market and specifically listing in London, Frankfurt, and Milan, given where Europe is in terms of leveraging ETFs, as well as where Europe is in terms of leveraging thematic ETFs, which does lag a couple years behind the U.S.
How painful, though, is it to be in this environment right now? I mean, it's hard for a lot of asset classes, to be fair, but how tough is it, Michael?
I mean, tough is a very strong word. We've been in the market for the last 8 years. Our investors, including, the Grayscale team, has weathered all kinds of market conditions and cycles. Typically, investors are not digesting this pullback in prices as something that's causing them to run for the hills. Many of them look at this opportunistically, perhaps a chance to average down on positions, perhaps a chance to take positions in other currencies or other protocols they wouldn't typically, otherwise do so. And again, most, if not all, the investors we deal with are thinking about their allocations over at least the medium to long term. So they are not fazed by this pullback.
Okay, so what does the next 6 months look like when it comes to the crypto markets?
Well, I think a lot of what you're going to see over the next 6 months is definitely going to revolve a lot about, regulation, particularly in the U.S. And our team thinks there's a phenomenal opportunity for the U.S. to really fulfill the White House executive order call to action that came out a couple months ago, really trying to ensure that the U.S. becomes and remains a hub of crypto innovation, a place where companies can flourish and offer products and services. And so as an industry insider, we're really proponents of increased regulation so that companies do have the ability to expand their businesses and they're not simply, trying to avoid other enforcement actions that maybe other companies in the space have gotten.
All right. Well, Michael, thanks so much. Really appreciate your time today. Hey, have a good holiday weekend. Michael Sonnenschein, he's Chief Executive Officer at Grayscale, joining us on the phone on this Friday.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Oh, man, we are having some wicked conversations in the break. Come join us. Come to our studio and join us.
It's too bad Ed Ludlow's not in our studio with us because I see him up there. I see him on the screen right now. He's in San Francisco.
Why is he so dressed up? Is he going to,
He's
traffic court today or something?
It's a pink tie. You'll be able to see it on YouTube in just a minute.
There he is.
We're going to be talking Rivian with him, though. He's got a great scoop.
It is rallying. We'll get to that in just a moment. Let's get back, though, to Charlie Pellet right now with a check on that trading day. Charlie, looks like we're at our highs of the day.
Indeed, and significant, Carol, because this is ahead of a long holiday weekend. We have got the Dow, the S&P, NASDAQ, all moving higher. S&P up 91 right now. That is a gain of 2.3%. Stocks are continuing to rebound from a steep sell-off that drove the market to near oversold levels, with rebalancing from institutional investors potentially lifting equities at the end of the month. We have got the Dow up 519 now, up 1.6%. NASDAQ rallying 364, up by 3.1%. The NASDAQ 100 is outpacing major benchmarks today. It is up by 3.1%, with Apple and Tesla each up by at least 3.7%. Apple shares up 3.75%. Tesla now pushing higher by 7.3%. 10-year yield 2.73%. Gold up $3.50 the ounce to $18.54, up 0.2, while West Texas Intermediate crude up 0.9%, $115.08 a barrel. So again, the Dow up 520, up 1.6%. The S&P up 2.2%. NASDAQ up by 3.1%. Well, as for the overall market backdrop, Joanne Feeney is a partner at Advisors Capital Management.
We're going to continue to look at earnings, and as we've seen, some companies doing better than expected and are getting rewarded for it, and others seeing the costs of higher transportation, wages, et cetera, really pinching on their margins and being really traded off on that.
And speaking of earnings, Zscaler shares are surging after the security software company reported third-quarter results that beat expectations. It also raised its full-year forecast. ZS on the ticker, Zscaler up now by 14.2%. Recapping a 512-point gain for the Dow, S&P up 91, up 2.2%, 10-year yield 2.73%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much. Charlie talking about some of the moves in the market, including we've been covering Rivian. It was up almost as much as 9%, still rallying, but it's kind of settled down to about a 6% gain, Tim.
Yeah, our own Ed Ludlow joins us now. He's West Coast correspondent for Bloomberg News. He's joining us from the Bloomberg 960 studio in San Francisco. Ed, early this morning, had a story out with our colleague Keith Naughton about Rivian manufacturing executives departing in a management shuffle. Ed, good to have you with us. What does our investing audience need to know about the shakeup at Rivian?
Yeah, it's basically a rethink of how the company works, who's in the top jobs, some new faces coming in. The departure that you mentioned was Charlie Mwangi, and when I started covering this company 2 years ago, we wrote about him because he'd had 6 years at Tesla before he was at Rivian, and so he was the chief, executive vice president, I should say, manufacturing engineering, which is a bit of a mouthful, forgive me. So he's gone, but they brought in a new COO, Frank Klein from Magna. I broke that story in March, and his first week is next week. And so under him, a lot of the sort of supply chain, manufacturing and engineering talent and the senior executives are going to report into this new COO. And it's all according to a memo from the CEO, RJ Scaringe, which was shared company-wide, and Bloomberg was able to see this morning.
And they're splitting, right? The business, the commercial,
yeah,
and the retail side. Tell us about that.
Yeah. So for those that don't know in our global radio audience and those watching YouTube, Rivian's really interesting because it's making consumer cars, the R1T battery electric pickup and R1S SUV, but it's also making commercial vehicles, vans for Amazon. And so it has this kind of dual stream business model. It's not splitting them into two separate business units, but part of the management shuffle and the restructuring of who's reporting into who's staying, who's going, is to kind of make clearly demarcate those, right, and make sure that the right people are focused on the right products. The van is really critical for Rivian. They want, and for the YouTube audience, you're seeing this beautiful, shiny electric pickup on your screen. But the thing about the van is, even though it's a slightly more boring product, it gives them visibility on revenue. Amazon is a huge backer to have in your corner. And that's why investors fell in love with this company in the first place, because it was so glitzy, everyone that was backing it from the investor front.
Another big backer, but not as big as it used to be, is Ford. And interestingly enough, Ed, that company actually delivering its first F-150 Lightning earlier this week. How should that look in the context of Rivian's consumer ambitions?
So my phone's going to ring, and Rivian are going to shout at me, and Ford are going to shout at me. But let's just be clear. They are frenemies.
Okay.
Ford was a big investor in Rivian. Ford sold down some of its stake when the restrictions and the lockup lifted on the stock. Ford is a competitor of Rivian, right? It may well be an investor in Rivian, but Rivian beat Ford to market with a battery electric pickup. It beat Ford to market with an electric delivery van. So now Ford is trying to compete with something it's investing in. It's very complicated, but the F-150 Lightning's out. And actually, I drove it last week, guys.
How was it?
It was really interesting experience. I drove it around a winery in Sonoma, classic me, and I went off-road a little bit. It's like an F-150, and I bet you there are listeners out there who have an F-150, a gas one. That's the thing about it. It's just an electric version of that. Same size exactly. In fact, the one that I drove was designed for commercial customers. It has a manual seat slider. Nothing fancy, but still a battery pack and drivetrain, and it was weird because it was so similar yet so different.
I got to share just something about Ed and the travels that I've done with Ed. Our audience needs to know that Ed loves his pickup trucks. Okay, so if I go meet Ed in West Texas to watch a rocket launch,
But
Ed
that's all you
shows up
can
with a
rent
pickup
in
truck.
Texas, right? Kind of ish.
Well, I should say, guys, I'm a Brit that didn't grow up with pickup trucks. No one in the UK had a pickup truck. So when I got the opportunity to drive a gas or electric pickup truck, it's a real novelty for me. And the Rivian and Ford electric pickup trucks are amazing machines. So, yeah.
So in the context of the move aggressively, even more so as we watch the geopolitical events and the impact on the energy markets, the move towards EVs, how do we have to put this in context what's going on with Rivian?
Yeah, I think with Rivian and with Ford, pickup is the most beloved segment in America, right? Think about Ford. It sells in a good year, in a good economic cycle, 900,000 F-Series pickups. Now, when we talk about electrification, the transition to electric drivetrain, you got to convince a big portion of the population to give up their gas-guzzling pickup and invest in the electric version, and that's the key market. So a success with the product, a successful ramp in production, competition, right, between Rivian and Ford, that's healthy for the market, and that's where a lot of the excitement is. And then you got Tesla in the background and the Cybertruck.
Took the words right out of my mouth, Ed. 10 seconds left. We made it through the whole interview almost without talking about the Cybertruck. I think there's something to be said about that.
Been told by Elon Musk, 2023, it's coming, it will be a volume product, but it's been delayed, just like every other Tesla product, and Musk is confident that they'll win that market segment as well.
I just want to know when that human robot comes out. And it's not just a person dancing around in a
Let's
white...
not go there.
I know. Ed Ludlow, always fun. Have a great weekend. West Coast correspondent, Bloomberg News, there in our 960 studio in San Francisco.
Let's get to Washington, D.C. now for a check of latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. We're learning more about why there was such a long break during the standoff with the shooter in Uvalde, Texas. Today, Texas Department of Public Safety Director Stephen McCraw said the commander on the scene mistakenly believed the situation had gone from live shooter to a barricade situation in which no children were at risk.
The on-scene commander considered it a barricaded subject and that there was time and there were no more children at risk. Obviously, based upon the information we have, there were children in that classroom that were at risk, and it was, in fact, still an active shooter situation and not a barricaded subject.
Stephen McGraw also read the 911 calls from teachers and students, including one in which a child begged for them to send for police now. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control, including Everytown for Gun Safety. President Biden may be getting closer to a decision on student loan forgiveness. Bloomberg's Nathan Hager has more from Washington.
After months of internal discussions, White House officials are currently planning to cancel $10,000 in student debt per borrower. According to the Washington Post, that forgiveness would apply to individuals who earned less than $150,000 the previous year, $300,000 for married couples. President Biden had hoped to make the announcement on student loan forgiveness as soon as this weekend at the University of Delaware graduation ceremonies. Sources say that timing has changed following the school shooting in Texas. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much, Nancy Lyons in D.C. So we talk Rivian with Ed Ludlow, which leads us to Tesla, and of course Elon Musk, which then again leads us to what's going on with Twitter.
It's like 6 degrees of separation for every single thing we talk
Elon
about
Musk.
Because, well, I don't know if I know you follow him on Twitter, Carol, but I don't know if you've been seeing his latest tweets. He's actually tending to weigh in on everything now in a similar way that.
I wonder if he's going to run for office. Can he run for office?
He is a U.S. citizen.
Yes,
he was not born in the U.S.,
Okay.
so he could run for office, but not the highest office.
Just saying, just putting that out there.
I think
Maybe
he's got
Elon
his
will weigh in
hands
on
full.
that.
Yeah.
He does have his hands full. So what's going on here?
Well, the U.S. Securities and Exchange Commission sent a query last month to Elon Musk over how he disclosed his major stake in Twitter, the clearest signal yet that the Wall Street regulator is scrutinizing his efforts to buy the social network.
It's an inquiry. It doesn't mean necessarily anything was done wrong, but there are inquiries that are done. So what the SEC requested was information from Musk about the timing of his disclosure and the type of filing he made, according to a letter dated April 4th that the SEC released today. The regulator asking Musk why it, quote, does not appear to have been made within the required 10 days from the date of acquisition as required.
Okay, let's go back in time a little bit because a lot has happened in the last couple of months. Remember April 4th, that's when Elon Musk disclosed that he acquired more than 9% of Twitter. A week later than regulators allow, and by using a filing that's actually typically reserved for passive investors.
He said he was passive at the time, wasn't he?
Yeah, and then we spoke to Kathy Wood a few days
She's
later.
like, doesn't sound so passive.
Exactly, and she was right. He has since embarked on a highly public $44 billion takeover bid. We should note the SEC did decline to comment on the filing, as did a spokesman for Twitter. An attorney for Musk did not respond to a request for comment.
So the letter from the SEC's M&A office is focused on a form that investors must file when they accumulate more than 5% of a company. Musk's filing indicated that the billionaire crossed the threshold on March 14th, and he initially said so on a Form 13G for passive investors rather than the filing for activist investors. Musk filed a Form 13D used for active investors the day after the SEC sent its April 4th letter. I know, this is a lot to follow, but anyway, the SEC is looking into it ultimately. You can read all of it, get all the dates, and follow it along. Just go to Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A big rebound for the U.S. stock market. This update brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com. We are looking at a 6.2% gain for the week. The Dow, the S&P, NASDAQ, all coming back from a steep rout that drove the market down for 7 straight weeks. Rebalancing from institutional investors, potentially lifting equities at the end of the month. We've got the S&P wiping out its May losses, on track for its best week since November of 2020. Worth repeating for the week. We've got the S&P up now by 6.2%. Here's where we stand ahead of the close. 12 minutes to go. The S&P up 86, up 2.1%. The Dow up 480, up 1.5%. NASDAQ up 338, up by 2.9%. 10-year yield 2.73%. Spot gold higher by $3 the ounce to $18.53. A gain there of 0.2%. West Texas Intermediate crude up 0.8%. $115.04 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Cryptocurrencies are the opposite of a prudent investment. They're volatile, have little practical use, and lack the real-world cash flows that underpin the values of stocks and bonds. Nevertheless, financial institutions are increasingly seeking to get crypto into employer-sponsored 401k plans. It's a misguided idea. Americans have a hard enough time navigating the retirement savings system without adding a risky option that even professional investors struggle to understand. And risky it is. The most established cryptocurrency, Bitcoin, is down more than 50% since November. Other cryptocurrencies have even less promising track records. People should be free to invest their money as they please, but not in their tax-advantaged retirement accounts. And while crypto may someday prove to be more than a purely speculative instrument, it's nowhere near that point now. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10.5 minutes left to wrap up the trading day and the trading week, and we're bouncing around just off our highs of the session when it comes to the equity markets. Folks, though, we are up for the week overall, really outperformance when it comes to those tech names, Tim. The NASDAQ's up about almost just shy of 3% for the week overall.
Really curious to hear what our next guest has to say about the macroeconomic conditions. Julian Bridgden is the co-founder and president of Macro Intelligence 2 Partners, also known as MI2 Partners. Julian joining us on the phone from Vail, Colorado at 8,150 feet. Julian, how was the ski season this year?
It ended brilliantly. It's unfortunately shifted a bit. It seems to start later and later, but it did end fantastic.
Is it too early for mountain biking because the trails on North Frontage Road are closed because of elk migration?
Julian, if you haven't noticed, Tim knows a little bit about Vail.
Yeah, a little bit too much, actually.
Okay.
A little bit too much.
It's what we call the shoulder season. It's where we'd get them. We'd head west, and we'd go to Fruta to ride our bikes because it was a little too wet
Julian,
and cold.
I'm putting him on a plane, and I'm just going to send him out there. All right, let's move on and let's talk about the markets. So listen, you guys are looking at the markets. It is an interesting time, and we parse every economic data point, every macro conversation to try to get an idea of kind of where we go from here. Mohamed El-Erian earlier, a Bloomberg Opinion contributor, saying, the Fed's between a rock and a hard place when it comes to policy mistakes and likely to make one. How do you see the macroeconomic environment?
I would agree. I would totally agree with Mohammed. We've been very, very aggressive on the inflation trade since, I think the first piece we wrote in 2021 was inflation, the most important variable. We doubled down at the beginning of this year. I think, our underlying models suggest that, we might be seeing some sort of flatlining in some of these headline rates, but there's an awful lot of underlying pressure still in the system. I think we might be transitioning a little bit in the inflation story from one of where we see it manifestly in some of the headlines and to where we start to see it in margins. And so, actually, in fact, if I want to say where I really think the rock and the hard place is, it's the equity market. And that's because I fear that if companies, and certainly some can, and we're seeing that, pass price pressures through, and there's still, I think, an awful lot of price pressure in the system. If you look at where PPI is and where core PCE is, there's about 600 basis points of deviation between the two. They're highly correlated. That would suggest that 6% has got to be absorbed somewhere. If it gets passed through, it's going into inflation. The Fed is going to have to continue to be very aggressive. It's not great for the equity market. If it's absorbed by companies, that's horrible for margins. That isn't great for the equity market.
So it's really interesting because it makes me think of what we've just heard from retailers. It's really been a tale of two different types of companies. We heard from Target and Walmart on one end, and then Macy's perhaps on the other end. I'm wondering, Julian, what's our investing audience to do? How do you play this market?
Like, are investors making mistakes by having bought up a lot of retail, certainly this week?
Look, we got down to some quite attractive levels. I've been short in my sort of PA portfolio, personal account. I've taken off some of those shorts. I think it's an active trading environment. I do not believe that this is a buy and hold environment at this point. I do not think we've flushed out enough. I think a lot of pundits, on Wall Street like to, particularly in the equity space, like to blame just this inflation story. It's just inflation. When inflation peaks, the Fed can back off, we can go away. I think Jay Powell made it absolutely clear, and for anyone who hasn't heard it, you can go and listen to exactly what he said in that NPR interview a week and a bit ago. He made it very clear that this is about right-sizing growth now. This is about slowing growth because they have overheating in the labor market. And even if the headline inflation rates mitigate, if you don't right-size labor demand and supply, it's going to go into wages. That's how you get those secondary effects coming through, and you embed that inflation in the system.
Julian, you know what's interesting? There was someone, and I know I mentioned this earlier in the week, Tim, that was on surveillance, but talking about we don't yet know what kind of organic growth is for companies, right? That's the problem. We just kind of don't know it. And until we do, it's kind of hard to price this thing.
It's extraordinarily hard to price it, right? We don't know. I mean, we had an enormous jump in S&P margins on the back of COVID. To your point, how much is this real, right? How much is not? Consumers had an enormous bunk up. They're now in the process of switching from goods into services. I think there is a supposition that, it's all right if we stop buying as many iPads and we just go out to, IHOP, right, and spend our time there, that won't be nearly as inflationary. I'm not sure that's true. I don't think the service sector can absorb this aggregate demand switch as easily as we think. So I think there's a myriad of different questions that we don't know. And that's in a part why I think, a lot of this talk about recession is wrong. I don't see that yet on the ground. In our models, we do not see a recession. Sure, you see some slowdown, but that's what tightening financial conditions is meant to do. But I heard an interesting story the other day where some realtor, I think it was in the New York Times, was running around calling the sky falling and saying, this is the first time in 2 years that I haven't sold a house the first day it went on the market. This one took me 2 weeks.
Sounds like a normalization, right? 2 weeks, that's still a very short period of time, regardless of what market.
Exactly, that's the point. So, sorry.
Well, right there, a little wacky when they think the norm is that you sell a house in one day with 50 offers that are well above.
Like, inspections too.
Like, this is what we need to think about. Julian, always fun when we get to talk with you. Really appreciate it. And sorry about Tim and Vale. You know, he hears Colorado and he goes
Come
crazy.
and look me up when you're next in town.
I will definitely do that. We'll get out on the slopes of the hill together.
All right, Julian Brigden, he's co-founder and president of Macro Intelligence, two partners, a global independent macroeconomic research firm, joining us on the phone from Vail, Colorado. Great to catch up with him. All right, we've got just a few minutes left in today's trading session. Folks, we're taking another leg up here in the last few minutes of trading. So we are up about 2.4% on the S&P, up 1.6% on the Dow Jones Industrial Average. And check out that NASDAQ, up 3.2%, buying into this long holiday weekend. Right now, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We are counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Katie Greifeld in for Taylor Riggs. We're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube as we parse a pretty interesting week here, Carol. We talk about coming into this week, we had 7 straight weekly losses. A lot of people that thought that was going to extend. We had a big rally on Monday. Things kind of got tripped up on Tuesday, and then it was off to the races the last 3 days.
Yeah, and I mean, talk about off to the races. Check out that retail sector this week, up about 8.5%. I was looking at the S&P 500. 6 of the top names out of 10 are retail names. Dollar Tree up about 29%. So we've seen investors pour a lot of money into this space, had a lot of news when it comes to retailers this week.
I just had to look twice to make sure that this data was right, because it is pretty remarkable to see after 7 weeks of consecutive losses that all 3 major indices are higher over the last 5 days by more than 6%.
I mean, it really is notable, the sudden whipsawing, even though, look, for every time that we saw consumer discretionary really power on higher, you then had the Gap sort of numbers coming out yesterday, just puncturing another hole in where sentiment is. You had the University of Michigan sentiment looking lousy. But it feels as though this is what makes the market, of course. That power is high, even as though we are worried about, in some way, how much consumers can really look through inflation.
Absolutely. And you're talking about worry. Obviously, consumers are worried. But if you look at the VIX, for example, I mean, just falling off a cliff. Again, it is almost a 3-day weekend.
I think one of the interesting stories, too, this week is kind of what happened in the bond market. And, you know, if Taylor were here, she would kind of break all that down. But some of the guys' tepid behavior that you're seeing there, the idea here that maybe people did look at yields and say they peaked, or maybe they are waiting for the big balance sheet runoff that starts June 1st, or, of course, the next Fed meeting. Who knows? And maybe when she comes back, she can explain.
She'd also say that munis are having a great
Unions
time.
are having a great time. Yeah, apparently. Maybe that's why she took off. All right, here's your closing numbers here on the day. The Dow Jones Industrial Average going to finish the day higher by about 1.8%. It's higher by about 6% on a weekly basis. The S&P 500 moving higher on the day. In fact, closing right around the highs of the day at 41.58 and change here, up 2.5% here on the day and up about 7% on the week. The NASDAQ Composite higher by about 3.3% on the day and 6.8% on the week. And let's take a look at the Russell 2000, because we did see a pretty interesting embrace of some of those small and mid-cap names. It's going to finish the day higher by about 2.7% and more than 6% on the week, Carol.
All right, I hate to be a bummer here, guys, but we're up about, 6.6% in the S&P 500 for the week overall. If you go back to, and then we had a bunch of selling, we know that, right? We've been talking about that. Go back to the week of March 18th. We were also up 6% on the S&P 500. I guess my point is, this is a market that continues to try and find what the bottom is, and we can have and can continue. Many market guests telling us expect more swings here when it comes to trading.
That is a worrisome size and scope, but I'm going to go right and back into optimist land, because I have a lot of green bars to show you. You have a very broad rally today. Up top, you have auto and components. Think Tesla, big day for Tesla. You also have some of the chip makers up there as well. If you look at the bottom, what isn't doing as well, it's food and beverage, it's telecom. Not as robust of a gain, but definitely still green on this day, Carol.
All right, so you know how you put a cat out on Twitter? Is it a happy cat this week, or
it's
what?
It's always a relaxed cat, I will say.
I know, it is always a relaxed cat. All right, let's get to some of the gainers. There were so many to choose from. Rivian, we just talked about it with Ed Ludlow, who covers the West Coast for us here at Bloomberg. This name up almost 9% at its highs, finishing the day up just shy of a 6% gain. reshuffling some of its senior executives. One in particular that used to work at Tesla was at Rivian, but he is departing. That's its manufacturing chief. The company's saying it's about some of the growing pains, so a little bit of a reorg there. Ulta Beauty, we've talked about it. Romain mentioned it earlier. We talked about it last night when it reported its results. Top in the S&P 500. This name pretty much ending at its highs of the day, up more than 12%. This is interesting. The company jumping as it raised its sales and profit forecasts. Talked about robust consumer spending on its products. So again, that's one that's a standout. And then I want to mention Farfetch. Up almost 27% here. And this, Romain, I find interesting is the company cut its EBITDA margin forecast for the full year.
Yeah.
You had a bunch of analysts cutting their price target on it, but maintaining their ratings, and they're all saying, we're focusing on the longer term. So anyway, up about 26%.
And before you move on to the decliners, I just want to point out with regards to the gainers today, you had something like 96% of the S&P 500 was higher on the day. And not only is that broad-based, but I was just looking through the data here. That's the second broadest rally that we've had so far this year. I think we had a rally back in February where we had something like 97% of the names were higher here. Not 98% of the names were higher.
What do you think of superlatives?
Well, I mean, I'm putting them together here. Tim, why don't you take it away and I'll come up with another superlative.
Okay, well, here's some more context about the breadth. The Dow, all 30 stocks in the Dow were higher today. There were only 19 stocks lower out of the more than 500 in the S&P 500. 484 were higher on the day, and only 19 were decliners today. Workday is one of the few companies that did finish lower on the day, down 5.6%. The software company reporting adjusted first quarter earnings that missed expectations. At least 5 firms cut the price target there, though Stifel did raise its price target. Big Lots also down more than 12%. The company reported net sales for the first quarter that missed the average analyst estimate. The company's not providing EPS guidance at this point. Here's something interesting. Inventory for the first quarter was up 49% year over year. Estimates were for $996.1 million. Inventory was reported at $1.34 billion. American Eagle Outfitters finishing the day down by 6.7%. The company finished lower after the clothing retailer cut its operating income guidance for the year. And here, at least 5 firms cut their price targets on American Eagle Outfitters.
And I promise you I would interrupt you at the end. I do want to point out here, going back to the volume issue here, I mean, this is actually the lowest volume day that we've had across all of the tapes here, going back to April 19th here. So it gives you some sense, too, of, I guess, how much conviction maybe
is that rebalancing?
Well,
is that because it's a holiday
some of the
weekend?
losers overall, it would seem, and the superlatives coming thick and fast. I'm meanwhile looking at cross asset to see what's been on again, off again, and really what was on the downside, and it has been ever since we took off in terms of risk sentiment, is the US dollar once again lower versus its G10 peers. The US dollar index off by 0.3%. We're seeing money go into some of the more commodity-related currency pairs. Canadian dollar pushes on. Australian dollar, some of the retail sales looking good in Australia, so strengthening 0.8%. And the Kiwi, a standing ovation for the New Zealand leader over here in the United States, over, I think, at one of the key universities, and Kiwi dollar currently up 0.9%. Let's have a look at the commodity spectrum, because, I mean, another weekly gain for oil. We are seeing global supply already continuing to be a concern. Brent crude up at 119 ahead of your driving weekends. I'm looking at also WTI crude on the upside. Natural gas pushes back a little bit, but overall, commodities is where we're going to focus for next week. You've got an EU summit, you've got an OPEC meeting, you've got so much to be thinking about from a commodity perspective, not to mention the food inflation that we get the United Nations weighing in on at the end of the week. And I'm looking at sovereign bonds, which is a very mixed picture today. Money coming out of the Australian debt, but we're seeing money basically sort of go back into sovereign bonds in Europe, Katie.
And if we look at Treasuries specifically, it's a good thing Taylor's in here because it was a really boring day. The bond market did close early at 2 p.m., but look at the screen there. I mean, you can see the 2-year yield completely on the day. And if you go down the yield curve there, I mean, these moves are tiny, less than 2 basis points across the curve. Just, you know, a pretty boring day. It's interesting, though, to see that 2-year yield completely unchanged. That's where your Fed expectations are priced. Maybe we finally reached equilibrium. Probably not, though.
Well, how do we make sense of it, right? There's a story on the Bloomberg buyer, John Chang, talks about Citi team downgrading U.S. stocks and recession risk and joining the likes of BlackRock and Morgan Stanley, who are all worried. And then you had stock funds seeing the biggest inflows in 10 weeks. Dip buyers return. We know that cash led the inflows overall, but nonetheless, $20 billion in global stocks ended in the week ending May 25th. So how do you
Yeah, and I mean, look, for every strategist note out that says, okay, we need to still hit a bottom, there are just as many strategist notes that say, buy into this dip and that we could be moving higher. I think the end result, Carol, frankly, is not a lot of people know. This is kind of one of those.
But there's money flowing. Like that to me, I love to see the flows, right? That's actual buying.
Yeah, there's flowing, and how much of that money is also still kind of sitting on the proverbial sidelines as well. I don't know. I guess it's whose money is flowing is maybe the question.
Yeah. Is it retail? Is it institutional? That's a key question. I think it's interesting that some of the correlations we're used to have broken down. Tim, you said it again and again, the crypto trade, the fact that that's still trading lower. There hasn't been a buying there that's finally moving in its own idiosyncratic way because we're worried more about some of the peculiarities to do with Ethereum upgrades and the like. But
is there a fork coming?
There's a merge, I believe, is the term, but it keeps getting delayed.
An upgrade or whatever, whichever way. It keeps getting delayed, and this is like why there's not much risk on sentiment there. But overall, we will see. It'd be interesting to see how the retail investor is currently seeing this choppiness.
I did ask Michael Sonnenschein over at Grayscale about that, and he said that it's too early for us to make any conclusions about any sort of decoupling from risk assets when it comes to crypto. It's only been a couple days.
Well, it has only been a couple days, but to see the NASDAQ 100 finish so strongly up on the week, Bitcoin get no love at all. I don't know. It's just interesting to see that correlation really come apart this week.
All right, we get jobs next week. We're going to hear from some Fed speakers. Remember, Jay Powell is also about, right-sizing growth right now. So we have to think about what really growth should be in this environment, and that's what we're trying to figure out. All right, the helicopter's here. We've got to run. Have a great holiday.
Are you tasting wine now? Is it that sort of a Friday?
You guys were talking rosé.
We didn't actually get bottles in person like you guys did.
You got to work on that with the producers.
We are talking beer. We have a beer guest coming up.
We're talking beer and movies, aren't we?
Beer is just bad soda.
Have fun.
Have a good and safe weekend, everybody. Happy holidays, and we will see you on Tuesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
We are going to talk beer and blockbusters.
Yeah, I'm ready.
I'm ready too.
Are you going to go see Top Gun? Did I already ask you?
Yeah, you did.
Did I ask you on air?
Thank you for listening to me.
Did I ask you on air?
I don't know. Everybody who's listening or watching us on YouTube, did Tim ask me on air? Just like,
I don't even remember. We do spend a lot of time together. I've sometimes run out of questions for you, Carol.
Ouch. That hurts. No, I think I'm going to wait until it comes out. I'm all right with that.
Oh, that's right, yeah.
Now that it's warmer, I just kind of want to be outside.
Okay, yeah, I do too, but Top Gun, I've been waiting years for this.
Really?
It's going to be in theaters for a while, though.
Silence of the Lambs, have you watched?
I have not seen
Independence
it yet.
Day, have you watched?
Yes, I've seen that.
What's the other one? What's the other one he did? Oh, Goodfellas.
Yeah, Scarface.
Oh, my God.
I gotta watch it this weekend.
All right, let's get to World and National News. Nancy Lyons, take it away.
Thanks, Carol. The anger is mounting over the law enforcement response to the Uvalde, Texas shooting. Today, the director of the Texas Department of Public Safety, Stephen McCraw, said the commander on the scene thought he was dealing with a barricade situation and had some time, not an active shooter situation with children at risk.
And for the benefit of hindsight, where I'm sitting now, of course it was not the right decision. It was the wrong decision, period. There's no excuse for that.
Stephen McCraw says a tactical team of Border Patrol agents was on the scene at 12:15, but did not breach the classroom until 12:50. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. President Biden, during an address today to the graduating class at the U.S. Naval Academy, spoke of the importance of standing firm against brutality.
The president told the newly commissioned Navy ensigns and Marine second lieutenants they'll be part of an unmatched coalition of global allies galvanized by Putin's invasion of Ukraine.
Not only is he trying to take over Ukraine, he's literally trying to wipe out the culture and identity of the Ukrainian people. Attacking schools, nurseries, hospitals, museums, with no other purpose than to eliminate a culture. That's what you're graduating into.
The president also noted that the Navy personnel would help ensure freedom of navigation in the South China Sea and beyond. In Washington, Irv Chapman, Bloomberg Radio.
Donald Trump's lawsuit challenging New York's authority to investigate his sprawling business was dismissed today by a federal judge. It's just the latest setback in the former president's effort to halt the 3-year-old probe. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Carol Masser, Tim Stenovic, live in our Bloomberg Interactive Broker studio, streaming on YouTube. So we're going to talk about the summer blockbuster season, which is getting underway with the sequel, finally, to Top Gun.
Yeah, but there's some interesting stories coming out about Top Gun here. This one by Eric Schwartzel, who writes for Dow Jones, and I believe, Carol, if I'm not incorrect, that he is we had him on our program a few months ago. He wrote a book about China and Hollywood.
He did, right? Good.
And
good
the
memory.
anecdote that he shared was the changes that had been made to Tom Cruise's jacket in Top Gun, to the badges on the jacket, and they were changes made since the first movie came out in 1986 to have patches that didn't offend viewers or the government of China.
Yes. Great memory. His book, I just had to look it up to remember the title, Red Carpet, Hollywood, China, and the Global Battle for Cultural Supremacy. And it is really interesting about the changes. What were you saying?
So here's what's interesting about this. I saw this story earlier today, and I thought to myself, were those changes for naught? Because in an entertainment industry full of uncertainty, few movies seemed as sure of bet as a sequel to Top Gun. However, the Chinese tech firm Tencent Holdings in 2019 signed on to co-finance the film. I'm reading right from Eric's story here, which the Shenzhen-based conglomerate hoped would yield a windfall at the box office. Yet when Top Gun Maverick hits theaters this weekend, it will do so without any financing from Tencent and without any mention of the Chinese firm that had once boasted of its involvement in the film.
All right, so Eric goes on to write the reason Tencent executives backed out of the $170 million Paramount Pictures production after they grew concerned that Communist Party officials in Beijing would be angry about the company's affiliation with a movie celebrating the American military, according to people familiar with the matter.
Association with a pro-American story grew radioactive, Eric writes, as relations between the U.S. and China devolved, the people added. The about-face turned Top Gun Maverick from a movie that once symbolized deepening ties between China and Hollywood into a fresh example of the broader tensions forming between the U.S. and China.
Guess one place where the movie will not be shown?
Where?
In China.
For now.
Right, for now. It's interesting. All right, this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Best week for the U.S. stock market since November of 2020, and it is on to the weekend with the Dow, the S&P, and NASDAQ all rallying today. For the week, the S&P was up 6.6%. This week, the Dow up 6.2%. NASDAQ this week up 6.8%. S&P managed to wipe out its May losses, had its biggest weekly gain since November of 2020. S&P up 100 points today, ending the week at 4158, up 2.5%. The Dow up 575, up 1.8%. The Nasdaq Composite Index up 390, up 3.3%. Nasdaq 100 Index up today by 3.3%. Among some of the stock standouts after earnings, Dell was up 12.9% today. Zscaler after earnings up by 12.6%. 10-year yield 2.73%. Spot gold up $3.10 the ounce to $18.53, up 0.2%. West Texas Intermediate crude up 0.9%, $115.15 a barrel on WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the advisor shares pure U.S. cannabis ETF. It's actively managed. It's down around 45% so far this year, down nearly 70% in the past year. Meantime, the global cannabis market size projected to hit about $198 billion by 2028. That's up from more than $28 billion last year by one measure, although, got to say, forecast him all over the place. But just a little context of kind of how cannabis has been trading and then potential for market size.
Well, let's get an idea of what things are like on the ground in the thick of it. Paula Fernandez is the founder and CEO of High Hemp. High Hemp is an all-organic herbal wrap company. It's trying not to use tobacco-based products to create brands like High Hemp. Paula joins us on the phone from Orlando, Florida. Paula, how are you?
Hi, I'm good, thank you.
It's really good to have you. It's good to have you with us. So Carol talked a little about sort of in the public side of things, the way that equities focused on marijuana have struggled over the last year. Give us an on-the-ground view and talk to us about why you're. Just give us the temperature of how you're seeing things.
Yeah, there's definitely a big confusion, I think, on the market of just how big the opportunity is, but it's not so easy because of regulations and how unclear it is for a normal entrepreneur to just go in and be able to withstand the market of just running daily operations, state-to-state market trade and stuff like that. I've seen that because of that confusion, it has a lot of people investing in things that they're not really sure about. And I think that's where the money's kind of leaking.
Well, talk to us a little bit about what you're doing at High Hemp and how you had the idea to create an all-organic herbal wrap company. And I think explain why there was this need and why wraps traditionally had tobacco or nicotine in them.
Definitely. I think back probably 20, 30 years, usually people would just use regular cigarette rolling paper. That used to be the traditional. Then with probably around the 80s and 90s, with hip-hop culture, that's when they started using tobacco wraps or even just opening up a cigar and then using that to kind of just smoke cannabis. And that created a culture of a new alternative from the cigarette rolling paper. So then that started a new trend. And then around 2000 or 2002, then it started becoming a trend of cleaner, organic. They wanted to see more things. So then other brands started creating the cigarette paper, but with more cleaner, sustainable outlook to it. So I saw the two markets of the tobacco wrap that originated from the cigar, and then the rolling paper that originated from traditional cigarette papers. And from there, I saw that there's two different markets and there's two different tastes to it when you're enjoying your cannabis. So when I saw the cigar wrap consumer, they enjoyed the slow burning of the cigar wrap, and they didn't mind the harsh taste of it because they would prefer the slow burning. The rolling paper side of consumers, they kind of saw it as I would rather not take that heavy taste, even if it burns a little faster. So when I was working at a smoke shop, my dad's smoke shop in Puerto Rico, I saw the consumers having those two, I guess, picks between the tradition or all the brands out there to smoke with. So that's when I started researching of just paper manufacturers that can create a hemp product that's kind of something in between both those items.
Paola, I want to ask you, talk to us about, we're Bloomberg, we're always interested in, even with startups, particularly in startups, when you come into a market, what kind of growth you're seeing. Tell us a little bit about some of those metrics, if you would, financially. I'm curious about how much you're selling, what kind of growth you're seeing. Are you a profitable company? Talk us through it a little bit.
Definitely. So right away, because we had the first to market, we had a good year of just being able to introduce a product that nobody had. We definitely saw sales take off right away. And then unlike other industries, at least for us in 2019 to 2020, we saw an increase in sales of about 25%. From 2020 to 2021, we continued different marketing and just really pushing our different SKUs and flavors, and we were able to increase our sales 59%.
So you're selling. So give it. So only because we're running out of time. So how much are you selling at this point?
Right now, last year we finished our year at around $16 million.
So it's interesting. So in terms of the demand, what is it that's kind of stifling growth? Is it just regulatory oversight? And I apologize because we only have about 45 seconds here.
I think it keeps growing. I think everybody just keeps smoking and there's no regulation to our product currently. So we have an open market to just keep growing. It's just on our production side, we're trying to increase our production. But the demand is there for the hemp wraps.
Paolo, just 20 seconds left here. I'm wondering about potentially people moving more toward vaping or edibles or chews rather than smoking. Does that concern you?
Currently, it doesn't concern me unless of regulation, but it just creates three different types of feelings when you use those different intakes of cannabis.
All right, we're going to leave it there. Paola, thank you so much. She is founder and CEO of High Hemp, joining us on the phone from Orlando, Florida. Interesting to see how this market kind of continues to evolve.
Yeah, interesting to get an on-the-ground view, too. We talk a lot about the publicly traded exposure, but good to hear from an entrepreneur in the space.
You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we're going to lighten it up a little bit this half hour. We did a little bit this last segment, but I feel like we're going to lighten it up in the next 30 minutes.
Yeah, we're going to be talking Top Gun. We're going to be talking beer. Kind of the perfect...
Did you see the first Top Gun?
Of course I saw the first.
Okay.
Oh, yeah. I saw the first Top Gun. Charlie Pellet will appreciate this. On the flight deck of the...
No.
Yeah, here at the museum.
Oh, on the west side?
On the west side.
Charlie, are you here at the Intrepid?
Hey, he had me at Intrepid. It's that simple.
You had me at hello.
And that's one of the great lines there, too. Everybody remembers that film, and I can't wait to see it. All about airplanes, why wouldn't I? Here's what's going on. What a week. We were flying high this week with the S&P up 6.6%. The Dow was soaring 6.2%, and NASDAQ doing a little bit better, up by 6.8% this week. S&P, by the way, had its best week since November of 2020, breaking a 7-week losing streak as economic data released confirmed consumer demand remains strong and inflation is cooling. But what about the economic backdrop? Julian Bridgeton is president of Macro Intelligence 2 Partners, and he was our guest right here on Bloomberg Business Week.
I think we might be transitioning a little bit in the inflation story from one of where we see it manifestly in some of the headlines and to where we start to see it in margins. And so, actually, if I want to say where I really think the rock and the hard place is, it's the equity market.
Today, though, the broad equities benchmark, the S&P up 2.5% on lighter than normal volume ahead of the holiday weekend. S&P up 100 points today. The Dow rallied 575, up 1.8%. NASDAQ up 390, up by 3.3%. 10-year yield 2.73%. Spot gold up $3 the ounce to $18.53, up 0.2%. West Texas Intermediate crude up 0.9%, 115.13 a barrel on WTI. Dell, after last night's earnings report, surging today by 12.9%. Gap, after earnings, had an up day, higher by 4.3%. Bring on the beer, bring on the movies. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You ask, we deliver. All right, Charlie, thank you so much. So this last half hour, really all about the kickoff to the summer season as we get ready for Memorial Day weekend. We're going to talk beer in just a moment, but first up, the summer movie season underway, jetting off in a big way with finally, the sequel to Top Gun.
Yeah, I know a lot of people have been waiting years for this, myself and my father included. Aww. Chris Palmieri is entertainment editor for Bloomberg News. He joins us on the phone from Los Angeles. Chris, good to have you with us. Okay, $130 million. That's how much this next iteration of Top Gun is expected to generate in its opening weekend. How good is that in 2022?
That's very good. It'll certainly be one of the top movies of this year. Probably, top 10 of the pandemic so far.
Does it
probably
get
top 5?
Does it get people who have been hesitant to go to theaters back into theaters?
That's been a huge issue. Older folks, the recovery in the theater business has been driven by superhero movies that attract, say, a 15 to 30-year-old customer, male and female. And we really saw that last weekend with Downton Abbey, just sort of did half as much as the previous Downton Abbey film. So the older customers are just very hesitant to come back. And so, Paramount, which is releasing Top Gun, hopes that those people who remember the 1986 film will return to theaters and get in the habit of going to them again.
Well, Chris, and that's, I think, so key. I'll wait till it comes and I can watch it at home streaming. How much of when a content maker, a movie maker is thinking about how they want to roll it out, is it still about the goal to get it to the big screen because that's where they make the most money?
Any director or actor would say that's where they want their films to appear, not necessarily, where they make the most money these days. But what we're really seeing is this bifurcation of the movies. As I said, superhero movies, people are going to the theaters for those. Top Gun will probably accomplish that because it's a big action film. Tom Cruise said, he wouldn't show it anywhere else. went through all these elaborate, mechanisms to fly real fighter jets and put the actors in them. And so he wants that on a big screen. It's meant to be seen on a big screen. The other movies that, the rest of us are just going to wait a couple weeks now and see them at home.
Well, how long would somebody have to wait in order to see this on streaming? Because what we've gotten used to, I think, in the last couple of years is perhaps concurrent releases, especially on platforms like Disney+. But that's not the model here.
No, that model was really born of the pandemic and is sort of fading away. The studios have realized that there is a value to having them run exclusively in theaters for a while. And what we're seeing, and this is probably a permanent change, is where it used to be 3 months or more before you got to see a movie come out on DVD. You're seeing that window shrink much more rapidly. So, it's sort of an industry standard. It's about 45 days. Now it's, in some cases, they'll put them out as soon as just a little more than 2 weeks.
And so what would a transaction, like if we wanted to download this on iTunes, later this summer and early 2023 for maybe, I don't know, $25, $30, I don't know what the going rate is these days. Is that going to be a possibility?
Paramount hasn't said exactly what its strategy is for home entertainment, but, certainly it'll be, weeks, not months.
Okay.
So you've got some numbers, or there's a number from a team member. So overall domestic box office expected to reach $7.7 billion this year. 2019, it topped $11 billion. It still has a lot of ground, Chris, to make up here.
Yeah, I mean, this is very likely a permanent change in the way people see movies. There's going to be, it's really going to take something big to get folks to go to a theater to see something, and Hollywood's realizing that. They're still making a lot of movies, by the way. There's a lot of mid-budget movies that are just going to be made for streaming services. We as consumers benefit from that. It's not like actors are out of work, and it certainly is easier on us. Yeah. So the movie is still, the business is still creatively thriving. It's just the theater business is going to be a tough slog.
Hey, listen, Chris, we've just got about 30, 40 seconds here. Yep, it's about the domestic market, very important, but so is the global market when it comes to global sales. We did a story earlier, courtesy of Dow Jones, just reminding us that Top Gun Maverick will not be seen in China. How much of some of the geopolitical concerns that are going on, especially U.S. and China, ongoing, if you will, if these movies, these U.S.-made movies aren't in those global markets, how big of a hit is it? And again, just got about 25 seconds.
It's a big hit. China's become the #1 movie market, but we've really seen this play out with films other than just Top Gun. It's been a tough couple of years for U.S. studios getting in China.
Are you going to see it this weekend?
I might wait.
Oh, you might wait. You might wait.
Interesting.
All right. Good to know. Good to know. Listen, have a great holiday weekend, Chris, and thanks for coming on. Chris Palmieri, he's the entertainment editor at Bloomberg News, joining us on the phone from L.A.
Well, let's go from L.A. to Washington, D.C. now. We check in with Nancy Lyons for world and national news. Hey there, Nance.
Thanks, Tim. Congress is on a Memorial Day break, but bipartisan negotiations are expected to continue on coming up with some sort of compromise bill to address gun violence. Bloomberg government's Jack Fitzpatrick is following those talks.
It's nothing that would, drastically reduce the 400 million guns in America. It's not something that gun control advocates would necessarily get excited about, but those conversations are happening to see what they realistically could get through the Senate with 60 votes.
Bloomberg government's Jack Fitzpatrick. The House Oversight Committee is demanding information about the marketing of assault weapons from leading gun manufacturers. Committee Chair Carolyn Maloney says they're concerned that the companies continue to market assault weapons to civilians, reaping a profit from the deaths of innocent Americans. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. President Biden is commending the U.S. Naval Academy's class of 2022 for persevering during the pandemic.
When the global pandemic forced everything, literally everything, to change. When you were told not to return after spring break as youngsters. When your second year, you weren't allowed to see anybody other than your roommate.
Biden told them they are graduating as leaders and said, those are easy words to throw around, but very hard to accomplish. America's goods trade deficit narrowed in April to $105.94 billion. That's an improvement from March, when the deficit was just under $126 billion. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C., our bureau there. So we have done a couple of stories courtesy of our Bloomberg team, our green team, just talking about what you might expect when it comes to power bills. They're probably going to be higher this summer, and some concerns about maybe more blackouts. There's just not going to be the power there to fuel air conditioners and the like.
Okay, this is like, every story that we've read about power this week and the last few has been really depressing. This is actually a little optimistic, Carol. Okay. Summer demand may climb 2.7% to peak at almost 31.8 gigawatts based on expected weather conditions. That's according to the New York Independent System Operator, said in a statement today. That's slower than its prior projection of a 4.6% increase. Now, most of the decline is due to homes and businesses installing solar panels.
Love that.
Which cuts the amount of energy consumers need to tap from the grid. That's what the grid operator said.
All right, so that means New York's grid operator saying it has enough supplies to meet needs during the hot weather months, even if demand surged to 35.5 gigawatts. 1 gigawatt is enough to power as many as 1 million homes on the New York grid. So a little bit of perspective. That's helpful. You and I, where were we that were like, was it
Vegas?
Vegas. We're like, why aren't there solar panels everywhere? Like, just put them on the top of everything.
And it was, we were, I don't know what floor you were on at the hotel. I was on the 33rd floor. And I looked out and didn't see solar panels anywhere. And look, that's, makes sense because...
And there were tons of, flat roofs.
There were tons of flat roofs. But, solar farms in rural areas and areas with a lot of land, like Las Vegas, they can be, a few miles away or pretty far away. But you think about it from the perspective of where we live here in the tri-state area. New Jersey actually has a lot of homes with solar panels, thanks to previous years where there have been a lot of tax incentives in order to do it. But we've talked to solar panel companies, and it is expensive to install them up front. But I have a friend who just did it, and it's his $40,000 investment is set to pay itself off, and it's going to take a while.
10 years?
I don't know. I have to get.
So I guess if you're building a new house, you're young, why not? That it will pay off over the long term.
Especially if prices keep going up.
Exactly. All right, you're listening to Bloomberg Business Week. Folks, we're talking beer. Memorial Day weekend. Come on.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best week for the S&P 500 index since November 2020, rising 6.6% and breaking a 7-week losing streak as economic data out. Some of it today confirming consumer demand remains strong and inflation is cooling. S&P up 100 points, up 2.5%. The Dow up 575, up 1.8%. And today, NASDAQ rallied 390 points, up by 3.3%. Bitcoin down 2.1%, 28,826 on Bitcoin. 10-year yield 2.73%. Spot gold up $2.69 the ounce to $18.53, up 0.2%. West Texas Intermediate crude up 0.9%, $115.13 a barrel. For the week again, the S&P up 6.6% this week. The Dow up 6.2%. NASDAQ this week up 6.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Well, it's Miller time, or it's something time. A lot of beer, by the way, will be drunk this week. And by one estimate, some 40% of beer sold in the United States is done so between Memorial Day and Labor Day. That's a lot.
I was surprised to find that out, Carol. Let's get into it with Alex Davidson, Director of Public Affairs at the Beer Institute. Alex joining us this afternoon from Washington, D.C. Alex, good to have you with us. How are you?
Good. Thanks for having me, you guys. You know, as you said, it's a big weekend for beer, and we view Memorial Day as the beginning of the beer summer. So in 2021, it looks like Nielsen says $2.1 billion of beer was sold in the 2 weeks before Memorial Day. And, you know, we're expecting big numbers this year, and we're looking forward to a great summer.
Is it the same where we were pre-pandemic? Like, how do you think about beer? Like, everybody was drinking, a lot during the pandemic. Like, we've done a million stories about that. So where are you guys, or where's the beer industry in terms of levels pre-pandemic versus today?
Well, that's a really great question. I think that, you know, just to start, I want to say that we've looked at the numbers, and the people that were drinking before pandemic and the people that, you know, there wasn't as much change in habit as we expected, or as that people were saying. So we saw, you know, some people increase their drinking, some people decrease their drinking. The biggest shift that we've seen, however, is, you know, on and off premise. So where people were at bars and restaurants, they moved to drinking at home, and we're still seeing that coming back, but we're seeing a lot of growth there. Obviously, bars and restaurants are really important to the beer industry, and we support our partners in the hospitality industry trying to get people back out there.
Okay, so what about tastes and types of beer? I live in Brooklyn. I've been there for a little over 10 years, and about 10 years ago, you couldn't get something that wasn't IPA in a bar. Mm-hmm. What are trends looking like for the summer of 2022?
I mean, the big thing that we're talking about is innovation. Where, 10 years ago, 20 years ago, we've seen explosive growth in beer. It's a more competitive, more vibrant economy for beer than it ever has been. You know, there's more than 6,400 breweries all across the country producing more than 20,000 different options for consumers. From an innovation perspective, we're seeing a lot more people moving to non-alc, to low-alc, hard seltzers. And
that's you, Tim, right?
Yeah,
Tim,
the non-alcoholic stuff. We've had the folks at Athletic Brewing on a few times, and their sales have been huge.
Absolutely. I mean, consumers are looking for more options, and brewers are doing a really good job of giving those options to consumers, whether it is the non-alc or, low, no, the whole variety.
Malt, hops, yeast, stuff that goes into beer. And I'm just curious about, so we talk a lot about, for everyone, these input costs have gone up so much. Tell me a little bit about what are some of the pressures, inflationary pressures, that are potentially facing the nation's beer makers right now, and whether it's actual ingredients to labor.
So brewers obviously are not immune to inflation. It's something that's affecting every segment of the economy right now. And the biggest input cost for beer is actually aluminum. We are seeing, significant aluminum cost price issues just, originating from Trump's tariffs that he put on. And that's in addition to, normal supply chain issues, labor shortages, increased transportation costs. So we're looking at all of those together as we produce beer. And, these are important things for, manufacturing, but also consumers. Consumers are feeling the pinch right now, and we're trying to keep prices low.
Are your members passing along the costs? Are they able to, or are they starting to increasingly feel like they cannot?
So like many other businesses, they are feeling those cost increases, and we're happy to say, beer prices have consistently gone up at a lower rate than inflation.
Mm-hmm.
So while overall inflation's at 8.3 and food items are at 9.4, beer is not at those numbers. So they've been able to try and keep those prices for consumers low.
So companies are eating the costs, it sounds like. Is that fair, Alex?
I think, especially when it comes to aluminum, it's something we've seen a lot of. Whatever they can do to make sure that consumers have access to the beer that they know and they love, and especially come summertime.
Alex, the Beer Institute is the trade association that represents America's brewers. I'm wondering what changes you're actively lobbying for right now on Capitol Hill.
Absolutely. So first and foremost, like I said, is aluminum tariffs. We recently ran the numbers, and since 2018, brewers and beverage producers have paid an additional $1.4 billion in tariffs. Wow. And this is in addition to, all of their normal costs. That's money that, these are brewers, both big and small, paying these costs over time.
And what's the political will to do something on this? I mean, is it is it China, the largest producer, I believe, followed by, I think it might be India, Russia?
So a lot of our aluminum, especially, what we're using as brewers, comes from Canada. A lot of it is recycled content.
Mm-hmm.
And unfortunately, I think, these tariffs have missed the mark on that front. Where they expected it to go, it's having unintended consequences. And, the aluminum that we're buying, whether or not it's subject to tariff, we end up paying a tariff price.
What are the other changes that you're lobbying for, apart from the tariffs on aluminum being lifted? What other changes do you want to see made on Capitol Hill?
So one of the biggest things that we lobbied for the last few years was lowering the excise tax on alcohol. Beer is one of the most taxed products, in the American marketplace. 40% of beer's cost is taxes. And by reducing taxes a few years ago, we were able to reinvest in our businesses, create jobs. There are now more than 2 million Americans whose jobs rely on beer. And we want to make sure that those rates don't change. We want to make sure that hospitality industry is supported. As I said, beer is sold in bars and restaurants, sporting events, live venues, and we want to make sure that they have the support they need to get back to pre-pandemic levels.
When you talk to your members, what is, you think, the biggest trend right now when it comes to innovation, evolution of the beer industry? We just talked to somebody, we were talking about the cannabis market. I'm just curious, is it that area, which we've been talking about for a while? What is it?
I think it's what we talked about earlier. It's non-alcoholic beers. It's low. It's, we're seeing zero carb beers. We're seeing zero alcohol beers. But we're also seeing, new flavors, new styles. We've seen the increase in nitro beers. And we still have hard seltzers. There's a lot of opportunities. I think cannabis is something that we haven't really broached yet. Obviously there's a political landscape there. But no, there's more options than ever. And it's a really diverse field.
What about when it comes to flavor profiles, though, and to different types of craft beers? Apart from the, health part of it, the no alcohol, low alcohol, what are the trends that we expect to see just in the last 30 seconds that we have?
Absolutely. So over the last few years, obviously there was a huge rise in IPAs. This summer season, we're seeing a lot more of, strongly flavored beverages and the rise of, just more variety in the marketplace. And I think that's what we're going to continue to see.
All right, we're going to leave it on that note. Listen, have a great holiday weekend. Alex Davidson, Director of Public Affairs at the Beer Institute, on the phone from Washington, D.C. All right, folks, get ready for the holiday weekend, the long holiday weekend. Quite a week, a rally coming back. We're going to get the jobs report next week. Do not forget to listen. Got a lot of time over the weekend. Check out our weekend Bloomberg Business Week podcast and broadcast. It's at 8 a.m. on Bloomberg Radio. We talk about the cover story of Business Week. What else did we do?
We got the CEOs of Hyatt Hotels, Mark Hoplamazian. We've also got, we've got the mayor of Chattanooga, Tennessee, too.
Yeah, CEO of Informatica. We've got a lot of different subjects that we talk about, including the tech sell-off and what's going on. Have a good and safe evening and weekend. Take care, everybody.